All right, everything looking good over here. Let's get this stream rolling. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. Looking good over here. Let's get this. Oh, sorry about that echo there. Okay, let's try that again. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is 8 p.m. on Wednesday, September 22nd, 2021. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So not much to talk about today. Obviously, we had the FOMC meeting and statements from Jay Powell. He did exactly what I said, exactly what I've been saying. No surprises there. People were trying to come out and say that it was going to be extremely hawkish. They were going to talk about tapering and raising rates and all this craziness. They literally came out and said the same BS they've been saying over and over again. They're literally going to do nothing. They will continue to do nothing. And then eventually one day they will still do nothing because they're afraid. They're cowering. They're scared. Jay Powell has been officially traumatized. He raised rates before and caused the market crash, leading up to the Rona dump, etc. Pulled back on that. Obviously they're never going to be able to raise rates. People are talking about they're going to start to taper, but they'll probably see a funds rate raise soon. Powell was very, very specific, just like I've been saying, discussing the three major points that we need to pay attention to. The first point is the actual tapering of asset purchases. The second one is the actual balance sheet itself. And the third one is the Fed funds rate. He clearly made a distinction between those three things, said that they were all independent of each other. He specifically said that the first two were not going to affect the Fed funds rate. And basically, the way I look at it and the timetable is exactly what I've been laying out. He said that they're probably going to start tapering by year end. So if you look at it as, we're already in September, so they're obviously not going to be doing it in September. So maybe in October they're going to announce it. Maybe. So what, they're going to start in November or December by year end? So yeah, okay. Maybe they start November, maybe they start December. He said that they're anticipating that they will start by the end of the year and that they think that it may be, finished by mid-year next year. I literally would bet anything that says mid-year next year, 2022, that they are still buying bonds and mortgage-backed securities. I would literally bet anything. I would go all in on that bet that the Fed is still purchasing assets. But whatever, that's fine. That's my opinion. We'll see what happens. So essentially what they're saying is over the next, assuming they don't start until January next year, assuming they start November this year, over the next 6 to 8 months, not including obviously the rest of this month and next month, because they're going to announce it first before they actually taper. Over the next 6 to 8 months, the relevant time period, they're going to go from purchasing $120 billion minimum dollars worth of treasuries and mortgage-backed securities to zero. So they're going to remove $120 billion a month in liquidity by the end of that time frame. So let's say over a 6-month period, let's just assume that they take their sweet ass time and they don't actually stop until the end of December, but they do it in their 6-month time frame. So they're going to now stop purchasing $20 billion a month and begin the taper. So that means that still the first month of the taper period, they will still be purchasing $100 billion. And then the next month, 80 billion, 60 billion, 40 billion, 20 billion, and then none. And then the taper is complete. That will literally never happen. If right now they're barely able to prop up the treasury market with $80 billion a month in purchases, and you could argue that the real estate market has been doing well, obviously, throughout the year, but now we're seeing less home starts, we're seeing less sales, we're seeing, basically now the eviction moratorium's gone. So we've just relieved all these pressures, all these bottlenecks, or many of the bottlenecks in the system from the housing market. And now all of a sudden we're going to stop buying whatever it amounts to, $40 billion over the next 6 months worth of mortgage-backed securities. So we're going to put more supply on the market by, basically getting caught up with home starts, new builds, etc., because those bottlenecks are gone. We're going to put more supply on the market because we had, basically a year to 2 years worth of, people that weren't able to get thrown out of their homes or didn't have to pay their mortgages. So all those are going to come online, for sale, or many of those, I should say, either from, repossessions, evictions, whatever. So we're going to see a bunch of extra supply come on there. And then all of a sudden a bunch of buying pressure is going to come off the market because we're going to taper off the $40 billion a month worth of asset purchases, which, times that 6-month period. Yeah, right. It's going to crash the market. It will literally crash the market. And then on top of that, let's actually pull up our 20-year treasury chart here. And let's keep in mind that the Fed is not buying 20-year treasuries. They're buying short-term treasuries, okay? So if this was obviously the CVD dump situation, and then what was it about? It was, I think the actual bottom was when they announced that they were going to start purchasing, or the actual topping, I should say, like right around this crazy volatility here was when they announced the purchases were going to start, and then also the CARES Act, which was, multiple trillions of dollars. So since then, this whole entire time, the Fed has been buying $80 billion plus in mortgage-backed securities. This whole time, they've been buying $80 billion per month in treasuries. So while the Fed was buying $80 billion a month in treasuries, what is the price of the treasuries been doing? It's been dropping. Now, granted, we did have a little pushback up here, in March this year, and it moved back up slightly, but we're still much lower. So if they stop buying or start buying less per month, what's that going to do? It's going to remove buying pressure from this chart, causing the chart to roll over and go down. So what is going to happen to bonds? What's going to happen to yields? The bond prices will go down substantially. Therefore, the yields based on those bond prices will go up. So you mean to tell me that that the Federal Reserve is going to stop buying $120 billion per month by mid-year next year? Yeah, fucking right. I don't believe that, not for 1 second. And then supposedly they're going to spend what? All of 2020, the second half of 2022 and all of 2023, they're going to spend the next 18 months after that, decreasing their balance sheet. Yeah, right. That's extra pressure. That's double pressure on the market. 1, because they're not buying, and 2, because now they're going to become a net seller. And then by 2024, everything's going to be hunky-dory, and then they're going to start raising the Fed funds rate. Yeah, right. Yeah, right. I literally don't believe any of that. There's a 0% chance that happens, in my opinion. But what do I know? I mean, what do I know? That's the craziest thing I've ever heard in my life. They will literally do nothing, and the moment that they begin to do anything, they will immediately pull it back because the markets will start throwing a tantrum, start crashing, and pray to God that they're able to even stop the crash, let alone to continue any kind of decrease in asset purchases, decrease in the federal balance sheet, the Fed's balance sheet, or ever raise rates. Yeah, right. We saw today, obviously, we can jump right into the TA now, after listening to Powell and his just ridiculous bullshit that is a 0% chance that I believe any of it. What's up, Bill? Good to see you, my man. So 10-year treasury yield, obviously, started to sell off a little bit and then popped back up. Closed pretty bullishly back above the 200 exponential, slightly below the 200 simple still. Looks like it's kind of making up its mind right here. Still overall has momentum in its favor. Essentially just oscillating between the 200 exponential and simple. I still don't think, I don't think the bond and yields have quite made their mind up yet. We had a pretty powerful move up here on the weekly, came back down, basically got rejected at the 21 right here. But again, fairly bullish close here on the weekly. So, the real question is this week going to close back above the 8 at the 21? I think more than likely we probably close at about 1.36. Anything could happen though. We're technically losing strength on this, so we'll see what happens. I still think it could go either way. And then looking at the monthly, we have basically a week left in this month at the end of what amounts to the third quarter. I mean, we're at the slope line. We're at the 8 and 21 right here, basically. So if we literally just go sideways, long enough, I think this is going to eventually pop back up. This is basically our first leg of the move back up. I think the next leg is going to be, back to retest the 200 exponential and simple. And the reason I say that is, and granted, this will happen over months, every time we constantly revert to the mean. And in this case, the mean is the 200 exponential and simple moving averages. So, maybe we oscillate around here. Maybe we start to push up. Maybe we go back down a little bit. But eventually, we're going to head back up. It's just a matter of where this is at when we get there. And as we get closer and closer to 1.5, 2.0, 2.5, that's going to basically amount to like serious danger basically for the markets. Because the only reason the stock markets are even staying as strong as they are right now is because, you're still getting 1.3% roughly, on these bonds. Because if you're getting any less than that, the money just flows into the stock market because you can get, basically your dividends amount to the same as your interest buying the S&P. Alternatively, if it's the other way around, if yields on these bonds start to go up, that's going to be more people that want the yields from the bonds. And then that's going to cause downward pressure on the stock market because people will leave the stock market to get the guaranteed income from the bonds. But either way, when you look at it, if we're averaging quote unquote 2% per year inflation, or realistically up closer to like 4 or 5 or 7%, then you're basically netting negative. So you're taking risk, but you're getting nothing for it. I mean, you're gaining back some of the inflation. But if inflation is at 2%, 4%, 5%, 7%, and you're getting 1.35 dividend bond yield, or what amounts to 1.5% on the S&P dividend, or whatever else you're taking as your safety bet, you're net negative on all those. So it's eating away at your buying power. So none of those are good bets right now. So eventually people are going to say the risk is not worth the reward, or the term that you hear all the time is, people are always looking for risk-free reward. Well, in current monetary conditions, it's the other way around. It's reward-free risk. You get nothing and you take risk. That's literally not worth it. This chart is bullish though. We're cooling off for right now, but we're above the slope line. We have all green histograms in a row for month after month after month. We left the bearish control zone, got the hard buy. The Stochs are powerfully angled to the upside, up near the bullish control zone, basically just running into some resistance. I expect this to have like a sideways to slightly downward consolidation and then aggressively pop up. Is it going to happen by end of year? I doubt it, but I mean, it's possible. TLT, I'm not going to look deep into this chart. We know what's going on here. It's basically going to act inversely, typically, to the treasury yields. We do see, obviously, the 20-year, popped up and closed at a high right here. And then we also see, obviously, that the 10-year yield popped up and basically closed at, its daily open today. So we actually saw, typically you'll see like an inverse move between these. One's 10-year, the other's 20-year. But that is kind of an odd move, to say the least. And then just kind of touching on what we spoke about last week on Sunday, the VIX did exactly what we talked about. Literally exactly what we talked about. We closed above the heart line here and then immediately gapped up. Where did we gap up to? We gapped up perfectly to the top of the channel. Literally hit our target to a T. That corresponded obviously with the sell-off in traditional markets. Obviously this corresponds to the S&P 500, but after that we did exactly what we said, topped out exactly at the top of the channel, came all the way back down to the heart line. At this point in time we're now on top of the heart line, so we need to see what happens here. There's obviously now what amounted to previous resistance that would ideally or theoretically act as support. But if we turn off our drawing tools here, we'll see now we have a positive slope on the 200 exponential, and the 200 simple is starting to roll over as well. We're above the 8 and 21 and they're angled to the upside. So now theoretically, we would expect these to act as support. Now granted, a couple times in the past, they have not acted as support and we have broken down below them once again. So it's possible that they fail to act as support and we just do the same thing again, start oscillating bound and just slowly move back down to the bottom of the range, while basically asset prices continue to float to the upside, which I would not be surprised by, but I think it's less and less likely. Each time this happens, there's a higher probability that when we come back down to it, we find support. And, honestly, going into year end, going into, fourth quarter, I should say, not quite year end, but I think we're going to see much more volatility. So it would not be surprising to see volatility at an elevated rate. US oil had an initial sell-off, gaining back strength. Looks extremely bullish still. We did leave the bullish control zone. We did get the hard sell, but we are basically just, to me, it looks like a bullish reset. Price is like floating up. The oscillator is floating down, and eventually it's just going to keep pushing back to the upside. I think we'll be in the high 70s very soon. We have all green histograms here, back on top of the zero line, back on top of the slope line, and now the slope line is blue. We have momentum in our favor. We have all the moving averages in our favor. We bounced at 200 perfectly. I think we're headed back up here to basically like 78 very soon. And after that, I don't see any reason this thing doesn't just keep cruising to the upside. Until we see some kind of signs or something change, I wouldn't expect it. Dow Jones sold off perfectly as expected, exactly down to our green box, literally touched inside the green box. Also, you may notice here, the reason we had the green box there was multiple reasons. Obviously, we had, what amounted to like this previous support right here. We have our red resistance, which we were expecting to act as support. And then, of course, we have the 200 exponential and simple moving average slightly below them. So we came down to it perfectly, got basically what amounts to, in my opinion, a dead cat bounce. We are now inside the bearish control zone. We have all red histograms, and we're seeing zero strength out of this. We see one single candle of strength to push back up, which amounts to, on most of the other indexes, a gap fill as far as I'm concerned. But we're seeing no actual strength. This doesn't look bad for a weekly candle here now on the weekly time frame. It's got mostly brought back up, but what happened? We broke down below the 8. We broke down below the 21. I specifically spoke about this the entire rally, the entire run up. We never had a candle open and close below. We had a close right here, and then open, and then we immediately got back above it. Here we closed below it, got back above it right away. Here we sold down, got back above it right away. Here for the first time, what did we have? We had literally turning off the drawing tools. We had exactly what I said. We sold down, we closed here, we opened another candle in between there below the 8 moving average. We then closed below it. That is extreme weakness. That is what amounts to a trend change in the market, as that has not happened, not one time, the whole rally up throughout this entire period. So now we have the 8 and 21 rolling over. We're potentially going to close below, if we close below 34,478 or roughly around that area, we will be now below the 21, and then we'll pay attention to when we get this open at the 21 and then close. If our next candle closes below the 21, that's going to look extremely bearish as well, because it's basically just going to be what happened at the 8 right here, but on a longer period time frame. So when that starts to happen is when we start to get into like, a little more violent of a potential sell-off or like topping pattern. We see here we have exited the bullish control zone. We got the hard sell. We see obviously the bearish divergence is playing out as we had a top back here. We then put in a new high here on the weekly. We put in a much weaker one here. We still have all red histograms. We're now below the slope line, and the slope line is red. The weekly, in my opinion, looks very bearish. Now, does that mean we can't get a temporary pop back up and potentially even put in a new high? Not at all. But we are losing strength, and we're losing it fast. We got a perfect bounce off the 8 on the monthly. We're seeing obviously weakness. This is exactly what I was talking about, we're basically up here at like the 97 on the monthly. Unsustainable. There's no more buyers to come into the market here. There's nothing left. We're basically just floating up. What is causing the float up when there's no buyers coming into the market? Well, it's people that have like, set amounts that they automatically purchase with every month. Whether it's them personally doing it, whether it's a financial, advisor doing it, whether it's automated, whether it's pension funds, whatever it is, it's just automatic buying. There's no actual buyers coming into the market. And just like I said, the moment any sellers show up, we're going to see some damage. And now here we have basically, granted we still have 1 day left in this week and 8 days basically left in the month. So we still technically have We still have a couple days to try to, get a further bounce up here. But at this point in time, we have bearishly engulfed the last 3 months and half of the fourth month. So, this month has taken out basically what amounts to like 3 or 4 months worth of positivity in the market. That itty bitty tiny little sell-off. So what does that tell you? It tells you this market is doing nothing. People are still bullish on this market while it does nothing month after month after month. Only individual stocks are actually moving at this point in time. And when you start looking at the statistics of how many are above their 50 moving average, how many are above their 100 moving average, how many are above their 200 moving average, it's looking more and more pathetic. And people are like, oh, but it's a rolling correction and then we can go up. No, it's called musical chairs. And people don't realize until the last chair is gone and there's nowhere to sit that they just got eliminated from the game. And that is what this market is looking like to me. We're now seeing our first monthly red histogram on the Dow Jones. Again, I'm not calling for like the end of the world. I'm not saying it's all over right now, but it's sure starting to look shitty. We hit our target perfectly, obviously. Opportunity for a move here. Obviously, I'm not like trading the Dow Jones with its pathetic little percentage moves, but S&P on the daily, didn't quite hit our target down here, but, nearly did. Essentially exactly the same thing happened. We specifically talked about the 821 cross right here, the close below it. We gapped down, we came back up, we filled the gap perfectly. 8 and 21 across to the downside. We're seeing all red histograms, hard sell. We basically just bounced an oversold condition. Remember what we talk about all the time, Pavlov's dog. We have been training the markets, training the suckers, the financial advisors, the plebs, the new quote-unquote investors. We have been ringing the bell and feeding them for years now, over a year now. Every time we ring the bell, every time we get a couple percent pullback, you buy the dip, buy the dip. And now we ring the bell, they run in to buy the dip, and there's no food around, there's no plate of food, there's nothing there. So now all of a sudden they're just sitting there drooling, wondering what the hell happened. That's what I think is going to happen. Does it happen right now? We don't know, but it's looking more and more probable. Now here we are. We need to pay attention now. We have our first close below the 8 moving average. We're still above the 21. But now this is our first open on the weekly in between the two. So wherever this week closes, if it does not close above 441 or the 8, it's going to do the same thing the Dow Jones did, where we basically get our first open and close right here. Here we had a close here, we had the open, we had the close, and then we gapped up and saved price action, continued to the upside. Is it possible that happens again? Yes, but keep in mind that the one time we got that close, open, close, that was when basically, September of last year. Every other time, we've never even seen that much weakness in the market. So again, we need to be careful. There's a change of trend taking place. We have been above the blue slope line, no matter how many red histograms we got. We've been above the blue slope line the whole entire time. And now here we have, for the first time, crossed below the blue slope line. It is still blue, but we're seeing red histograms on the weekly, and we are clearly below it now. Again, change in trend. This is what market tops look like. Again, I'm not saying this has to be the top. Don't just sell everything and give up and just wait. It does not mean that. This is obviously not financial advice. I'm not your financial advisor. These markets are extremely volatile. There's a million levers getting pulled right now by the Federal Reserve, by the governments all around the world. There's a million moving parts in this thing. Okay, so do your own research, trade responsibly, but pay attention that this is the first signs of danger in these markets that we have literally seen on a weekly time frame since the crash. So we're seeing something different we have not seen. So if you were ever bearish before and you're not bearish now, you need to go take a cold shower and then come back and look at the charts again and say, whatever I was bearish about before, now I need to pay attention to what's actually happening on the charts, because there's even more reason to be concerned, to be cautious, to be whatever you want to call it, whether you want to be a bear or not, etc. On the monthly, again, first red histogram we have seen since the markets have gone absolutely parabolic. And again, we are literally maxed out on the stochastics. I mean, we're up here at 98. And just a reminder, here we topped out at 97 and some change. Here we topped out at 96 and some change. Keep in mind, this is on the monthly. When we topped out back here, that was our 2015 dump / sideways consolidation. So whether you want to call this an actual dump or just a consolidation, what happened basically, we all but went sideways for 669 days. So we basically just went sideways for 2 years, okay? And then on top of going sideways from the, top to our actual sell-off, we sold off 15%. So 15% down and 2 years sideways. I mean, people would lose their fucking minds right now if we go sideways for 2 years or sell off 15%. It would literally be the end of the world. And keep in mind, the only thing that has been causing this price to move to the upside this whole entire time is record high increased options trading. Okay. So what is the difference between trading options and trading like spot markets, buying a stock or selling a stock? There's an extra variable. Okay. In a normal market, in an uptrend, if you're just buying a stock or selling a stock, all you're betting on is direction. Time is not relevant because you're not using leverage. There's no time decay on your position. You literally, it sucks sometimes. Something goes sideways for a while, but there's no actual, you're not forced to sell. You're not forced to buy. You don't have a ticking timer. With options, it's the opposite. You have to bet on the direction, and then you also have time as a factor, and then you have to, meet your strike price. So now you have to be right about direction. You have to be right about the velocity or magnitude or dollar amount that it moves in. And then also you have a ticking timer going on. So going sideways for 2 years or 1 year or even 3 months or 6 months can literally be the difference between people getting completely wiped out and, this casino that has been taking place right here. So again, very clearly a change in trend, something that is worth paying attention to. As we could see some serious changes taking place in the market right now. And I know by the dip and the Evergrande thing is over and they made their interest payments. How is it that all of a sudden everybody's talking about Evergrande, but we've been watching this exact stuff and the market is playing out perfectly before anybody was even talking about Evergrande? Because that's all bullshit. It's all a narrative that the media spins, that people spin to say, oh, this is why. That's the reason why something happened after it happened. Where were they with Evergrande before it happened? It's not like Evergrande just popped up and all of a sudden it's a piece of shit and bankrupt. No, it's been that way for months, for years. Everyone knew. It's just now it's the reason that everyone needed. It's the justification for why, you beat up your family. You're like, oh, but I'm having a tough day at work, or I drank too much, or no, you're a piece of shit. And the markets are a piece of shit. And they're just using that as a reason for why. I mean, it's absolutely ridiculous hearing people talk about this stuff. Evergrande is garbage. No one knows what's going to happen with that. No one knows if they're going to get bailed out. No one knows if the Chinese Communist Party is going to come in and buy them up at pennies on the dollar and nationalize them. No one knows if all those buildings are even worth the $200 billion in, assets that they supposedly have. Maybe they get downgraded and then they're only worth $100 billion. Maybe they start smashing them and knocking them down because they're empty buildings that no one lives in. No one knows. No one knows what the CCP might have an agenda to crash the markets and then crash all the world markets and then come in and buy all that up. Or maybe they're going to start a war. No one knows. So trying to speculate on all that and then say this is the reason for this and this is the reason for that, no one knows. It's pointless. There's no reason to do that. So if you're going to use these fundamentals and you're going to look at the Evergrande situation, all you're doing is you're just convincing yourself, why the markets look like shit. Oh, I drank too much, so it's okay that Evergrande's a piece of shit. No, just look at the technicals, take all that bullshit out of it, because none of that's going to help you. Now, there's certain situations where those fundamentals can actually help you and be useful, but this is not it. This is not it. All everybody's talking about is this Evergrande situation. All it is just like, somebody is snapping over here to get your attention and then they're reaching in your back pocket and stealing your wallet. That is what is taking place right now. Okay, because nothing has changed in the U.S. markets. Even if Evergrande defaulted, which they didn't, they made their payments, it would be a month from now they defaulted, and then they would actually have to get downgraded at that point in time, and then that would take time to play out, and none of that would even be in the market. So granted, they're forward looking, but nobody even knows how this thing's going to unravel. It's not until it actually unravels that you start seeing the actual damage playing out. So speculating on that is literally just doing that. You're speculating. And that's not what this channel is about. We're about technicals. We're about actual analysis and measurable things taking place. So here on the IXIC, the NASDAQ, we got the move that we predicted, expected. Exactly. Broke down from the 821, got the cross, came back up, try to close the gap, retested 821. So we have a break now. We have a retest of the breakdown. We have confirmation that we're not able to get above this. Now we'll wait and see what happens tomorrow. But after that, I expect continuation. And what's the direction of the continuation? To the downside. Because when we lose support or when we break through a resistance, we expect to reset, retest it, and then continue in the direction of that move based on the velocity of the move itself. So here we have everything pointing to the downside. If we come back down here and retest 14,326, we need to see that area hold or it's going to look very, very bearish. Here on the weekly, we retested the 21 perfectly, got the bounce back up. So we need to pay attention to, do we close now below the 8? Which is basically 14, let's say 15,000. And now if we pay attention to the histogram down here on the TJD TDMACD, we topped out back here. We then came up here. We put in the same high right here. We put in a lower high on the indicator oscillator, bearish divergence. And then we came up once again, put in a new high once again. And again, we put in a lower high here on the indicator oscillator. So now we have 1 drive, 2 drives, 3 drives of weekly bearish divergence, 1 drive, 2 drive, 3 drives, demonstrating both our traditional bearish divergence as well as hidden bearish divergence on our indicator oscillator. And typically after 3 drives of bearish divergence, we will see a violent move to the downside. We saw it in Bitcoin multiple times, so we can look at exact specific examples. Bullish divergence obviously plays out all the time, but 3 drives on a weekly basis typically results in a pretty violent move. So we need to pay attention to that. We obviously have now a hard sell on the weekly. We only get the hard sell at the actual cross right here. We have not yet left the bullish control zone, but are starting to violently move down here. The previous 2 times that we got the hard sell on the weekly, we left the bullish control zone shortly afterwards, and they obviously resulted in what amounted to a pretty violent dump at this point in time, from peak to trough, 13%. And then here obviously was our basically top in the NASDAQ, which we sold off another 13%. So what would I expect to happen this time? Probably somewhere around like 13+%. Would it be crazy to think we come down here and retest the 200 exponential or simple moving average? Well, I mean, this is what happened with the CVD dump back here, was a retest of the 200 exponential and simple. So we see obviously over time what happens, reversion to the mean. So going back here now, this is looking way back, obviously, to, after the mortgage crisis, 2009. We touched a 200 exponential here, touch a 200 exponential simple here, here again, here again, here again for the CVD dump. So now if we were to get a violent move and were to happen to come down here and retest those, we're talking about 30% move to the downside. So, that'll never happen. We'll never sell off 30%, blah, blah, blah. Well, I'm sure that's what people were saying right here. We'd never come down to the 200 exponential. We'd never do it here. 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 So I'm sure we'll never do it here as well. It makes perfect sense that we'll never do what we do every other time on a regular basis. So monthly, first red histogram, very much still inside the bullish control zone at max out levels. Again, don't want to get overly bearish here, but we are seeing what amounts to the beginning of a bearish engulfing candle. Could still easily put in new highs, could still easily keep melting to the top, could still easily get our trade set up and continuation to the upside. Would not put it out of the realm of possibility, but it's looking less and less likely and more likely that we are in fact at a temporary or possibly even cycle high for this, let's just leave it at cycle for now. So Russell 2000 on the daily, again, it got the exact move that we were expecting. Topped out right here, sold off, could not hold support above the heart line, retested it as resistance, and then immediately sold off, came down slightly above the 200 exponential, slightly above the bottom of the range, slightly above my target, but played out literally, exactly perfect. You could argue that I missed the target by 0.26%. So yeah, I missed it by 0.26%. Sorry. And then afterwards, obviously got an immediate bounce, got rejected back at the heart line again. And now here we are trying to get above the 200 simple. Looks absolutely pathetic. And again, we just wiped out all the potential possible gains. This thing has now been going sideways since February of 2021. So, the better part of a year, over 6 months, just sideways in this range, while the stock market is supposedly banging, the economy is supposedly crushing it, everything is amazing. Well, meanwhile, the government and the Federal Reserve are pumping liquidity into the system as fast as they can. The fire hose, the helicopter of free money, monetary policy, they're pumping money to the people, dumping money in people's bank accounts, paying you to lay on your back and pump out children as fast as you can, up in the food stamps. They're literally pumping money anywhere possible, puking money into businesses. And what is happening? Nothing. We're going nowhere. We're literally going nowhere. So how is this possibly inflationary? They're fighting deflation. This is them fighting deflation. And what's happening is there's bottlenecks in the areas that are causing little pockets of inflation to take place. But inherently, everything that's happening right now is massively deflationary. If it wasn't, if we were in a normal environment and things were good and they were doing what they were doing right now, everything would be we would be in a hyperinflationary environment. 100%. I totally agree. But this is not, they're not doing this for the hell of it. They're literally doing it to try to prop up the market, prop up the economy, prop up households, prop up the world right now, attempting to stop a Great Depression level crash from taking place. That is what is happening right now. So anybody that's saying it's hyperinflationary, the inflation, sure, I'm sure you can go out and you can find spots and you can say, there's inflation, I see it, there's some right there. It's in the car prices, it's in the meat, it's in the this, it's in the that. Sure, they caused all this inflation by creating bottlenecks, by shutting down the economy. If we didn't shut down the economy, if we didn't get scared and we just let everybody do their thing and just everything went on as normal and we didn't pump all this money out, we didn't have an excuse to bail out all these businesses and the banks and the households and everybody just went about their business. Just imagine that scenario right now. Sure, maybe some more people would have died. Maybe more people would have caught the big V. Sure, whatever. Okay, put all that aside. I'm not trying to be heartless, but just imagine a scenario where that all happens. What would the economy look like right now without the, $30 trillion that got pumped into the economy around the world over the last year and a half? The economy would look like total shit. It would be dead right now. Everybody would be getting laid off because everything would be going out of business because nobody would be spending money. The only reason the economy in the world right now is still on 2 feet is because there's a giant monetary and fiscal crutch under each of its armpits holding it up off the ground. That is literally the only reason. And right now, there's termites eating away at the wood of the crutches, and they are getting ready to fail and break. That is what's happening in real life right now, whether people want to admit it or not. So now looking here at the Russell, let's pay attention to what's taking place and how horrible the Russell looks on the weekly. It looks absolutely horrible. We have literally had week after week after week of downward pressure on the histogram. The slope line is red. We have had literally, one green one back here, one here, two here, while we literally went sideways inside this range. And now here we are, the weekly 8 and 21. We are well below them, and they are very, very close to crossing to the downside. So we are getting ready to, keep in mind, in June of 2020, we entered into an uptrend with the 8 and 21 crossing back here. And now they're getting ready to cross to the downside. If that cross takes place, I 100% fully expect a retest of the weekly 200 exponential and simple moving average on the Russell 2000 piece of trash, which is a 22.6% move to the downside. Looks very, 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 very likely on the Russell 2000. Why do I say that? Well, what happened every other time here? This time was back in 2014. We literally had the same situation play out, and then we managed to make all-time highs, and then we eventually overshot and got that test here. We then cruised to the upside. We saw the cross take place back here in 2018, and we overshot the 200 exponential and simple moving average. We then rallied back on top of it, and then we saw a lower high get put in for the CVD dump right here, and everybody talks about how great the economy was, how great the world was, how great everything was, and yet somehow the Russell had not put in a new high from 2018. So no matter how good the economy was, all the businesses that made up the Russell 2000 were not able to take out the high from 2018 before the COVID dump. So everything was fine. Everything was going great. But somehow we had gone sideways for 2 years and not taken out the all-time high. Yeah, sure. That makes total sense. The economy was doing fan-fucking-tastic, but somehow all the businesses, the 2,000 businesses that make up the Russell, minus the top 1,000 businesses, the next 2,000 best businesses that make up the Russell, were not able to take out the all-time high. But things were going great. The economy was fan-fucking-tastic. Sure, I bet. And then after that, capitulation dump. So, and where did we come down to? We massively overshot the 200 exponential and simple. So this looks like a topping pattern to me, and it looks like we are coming down here to retest the 200 exponential and simple on the weekly. This looks like total shit right now. Total shit. And then here we see on the monthly, well, let's get another, once again, very clear picture here. 200 exponential and simple moving average. We break down from the 821 cross back here in 2008 mortgage crisis, come down, break through the 200 exponential and simple. Okay, then we see a cross back here in 2015. We're able to save the cross and move back to the upside. And then we see the CVD dump. Where does it take us to? 200 exponential and simple. So now we're still on top of the 8 right now. But if we sell off from here, I would expect an immediate test of like 1956. We now see 1, 2, 3 months of red histograms in a row. And we are literally at the highest part we have ever seen, the highest histogram ever on the TJD TDMACD. So for everybody that says, this isn't how markets top, they blow off top, they go parabolic first. If this is not a parabolic blow off top scenario or parabolic / rounding top scenario, I literally don't know what is. I don't even know what is. Not every top is going to look like this. Some tops are going to look just like this, where they go absolutely parabolic and then it rolls over and they go parabolic to the downside. And that is what it looks like is about to happen to me. But I mean, hey, what do I know? I'm just literally showing exact examples in the past of when all this stuff has played out. So let's look at XLB. We'll go through our sectors here. Material sector sold off perfectly to the 200 exponential and simple. No surprise here. 100% expected that. Looks like a bearish rejection candle, bearish control zone, all red histograms. Material looks very, very weak. Obviously, communication sector got the breakdown from key support right here, got the 821 cross to the downside. We are halfway to the target. I expect continuation back down to like 76.50. We are obviously very much, arguably, quote unquote, oversold. But this is a pathetic move back up here. You would have expected this to at least attempt to come up and fill the gap. XLY, consumer discretionary, looks decent. Got the move back down exactly to our target. Actually overshot it violently to the downside. We did not hold the area that we spoke about that we were basically needing to hold. That's the third time we have broken down below it. We rallied back above it. But again, we got the 821 cross to the downside. We did continue to operate perfectly inside of our ascending wedge right here. Once again, the bottom of the wedge acted as perfect support. In my opinion, this is not a tradable range, but it's important to pay attention to consumer discretionary. The consumer is strong. Households are strong. They have record savings. Sure they do. Sure. I'm sure that they have record savings because they haven't been paying their rent for a year and a half. They haven't been paying their mortgages for a year and a half. They haven't been paying their student loans for a year and a half. You're getting $300 per child that you have just because they exist. You're getting 25% extra food stamps. I'm sure that households are doing absolutely fantastic. And without all the crutches holding everybody up right now, I'm sure everything would be doing great and the consumer would be super strong. And we have record number of credit card debt. Literally the most in trillions of credit card debt nationwide ever in existence right now. But households are strong. So I'm sure they don't want to just take the money out of the bank account where they earn 0 interest and pay off their credit cards with somewhere between 12 and 30% interest. I'm sure that they have so much money that they just aren't doing that because they just don't feel like it. Because, why wouldn't somebody want to pay 18% interest when they're doing great? Their households are doing fantastic. Yeah, fucking right. Makes perfect sense. XLE, energy sector, barely hanging on to the 200 exponential and simple. We had a massive sell down here. By far the worst sector. Literally the only thing holding this up right now is natural gas and oil, in my opinion. And those both are shitty right now too. Natural gas is at highs, but had a violent sell-off. Barely hanging on to 200 exponential and simple. Starting to gain momentum to the upside. Starting to look like a potential inverted head and shoulders right here. Literally like we discussed. We expected us to come back down and put in potentially a right shoulder, which we did exactly. So now at this point in time, this looks like it's a bottoming pattern off the 200 exponential and simple. Could it easily fail and continue to the downside? Sure, but it definitely looks to me like this is getting ready to burst to the upside and get the measured move of the head and shoulders pattern. So Absolutely blows my mind how fucking stupid everybody is in these markets right now and the economy and everything. It just blows my mind how blinded everyone has become by 1 year of positive price action. That's how you know that we are literally at like the end of a cycle high on all these assets. I'm expecting a target up here of like 56 if we get that push to the upside. So we will see. But again, you know, when we start looking at this on a longer time frame, it starts looking decent. Here's the weekly coming up, hitting the 200 exponential and simple after a long, prolonged downtrend for years. And then now here we're trying to rally back above the 821 and see continuation and a burst to the upside. And then here on the monthly, you know, same thing. Got rejected at the 200 exponential. We're now finding support at the 821 after our first monthly cross since, you know, our cross to the upside last time was in March of 2018. So we had a violent sell-off. We're now showing some strength back to the upside. You know, do we get up to 65? I don't know. It sure looks like it though. But we'll have to wait and see. XLF is next. Financial sector. Again, very weak. Sold off here. Gap down. Came back up. Filled the gap. Didn't quite make it to our target. Still expecting a retest of our green support right here. Our green box area and the 200 exponential and simple. We now have the 200 simple crossing the lighter blue. Not the bright blue. The light blue or the faded blue. Crossing above the brighter blue. For the first time, this entire trend up here showing us that we are topping out. We're losing momentum. We're losing strength to the upside. You know, looks very weak. Financial sector looks very weak and has probably more headwinds than anything else. XLI, industrial sector, again, very, very weak, trading sideways inside of a channel. Got the push down here, hit our target exactly, the 200 exponential and simple. 200 simple has rolled above 200 exponential. We are back down at key Fibonacci level. We have broken down from the yellow channel right here. We broke down as expected from the heart line of our larger channel right here. And now here we have our next potential channel target, heart line of the main channel, as well as the bottom support of our short-term yellow channel here in play, expecting a move down here at some point in time in the near future to 90. Does not mean we don't get a bounce up on the industrial. We could easily come back up, retest the heart line, blah, blah, blah. But we broke down from key support, and this looks like a break, a retest, and then I expect continuation. But the 200 exponential and simple, the bottom of the channel, and the key support could easily hold up price for a little longer, and we could see some sort of like, you know, reaction rally effect. XLK technology broke down, came back up, closed the gap. 821 have crossed to the downside as expected. Once again, did not get down to our target, the breakout of our previous resistance, which we would expect to act as support at 143, and the potential test of the 200 exponential and simple right here. No surprise, as we did in fact have bearish divergence, and we're seeing that play out on most of these sectors. XLP, again, got the exact move that we were expecting. Our double top pattern right here, the breakdown was the measured move from the top of the range to the bottom of the range. It's so crazy that literally I made this video on Sunday, and then by, you know, 12 hours later, every one of our measured move targets had like literally gotten hit perfectly. I mean, this market is literally our bitch. It's absolutely hilarious how much this market is literally on its knees, just begging for us to put it out of its misery. And that, you know what? That's what we're going to do. We're going to keep taking advantage of it. And then finally, one day after its throat has been slit, it's going to bleed out, and we're just going to stand there laughing, counting our money while the rest of the world burns. And that's okay. That's okay, because I get on here, you know, multiple times a week, do excerpts from the videos, trying to warn people, trying to help people. Not my fault they don't listen. Not my fault that they just want to listen to the bullish moon boys. Absolutely hilarious. You know, but hey, you guys will all be there with me in the end. You know, while the rest of the world burns, we'll be on some island somewhere, you know, with our new slave class of people wearing masks while we party in our tax the rich dresses like AOC does. XLP, consumer staples, perfect move down to the heart line. I would expect continuation as we now have 3 bearish candles in a row. Pathetic attempt to move back up. Could not close the gap. Could not get back up to retest the resistance. Could we still get up there? Sure. But it looks like now we're coming down to the 200 exponential and the bottom of the channel, bottom of the range, 69. Bunch of weakness right here. 69, that's great. XLRE, real estate. Again, you know, this has been probably one of the strongest and overperformers this entire range up here. You know, we had basically the 821 retest of the 200 exponential and simple when we crossed over it back after the CVD dump at the beginning of the year. We had one more retest of it here where we crossed the 821 to the downside. We then shot off to the moon, did not even come close to it. And now here we have broken down. The 821 have closed. It was very obvious what was going to happen. Now we have broken down, came back up to fill the gap, to retest the 821 as resistance. I now expect us to move back down to our previous range down here in yellow and retest the 200 exponential and simple. And why do I expect that? Well, because that's what markets always do. Reversion to the mean, retest of the 200, looks very obvious, obviously. When you're looking at my chart ahead of time and then you see it 3 days later and you're like, oh shit, that's crazy. It's literally doing exactly what I said. XTN transportation sector, pathetic bounce off the 200 exponential and simple, lower high, pathetic bounce back here again. 200 simple has crossed above the 200 exponential. Just a matter of time before we get our measure moved to the downside. I do expect some temporary support at our previous breakout right here, and also potential for a quick little trade scalp back to the upside, which would easily be an underperformer, but about $74 after that $65. Jets, we're getting ready to one of my juicy ones where I literally went on a rant about last week, or Sunday, I should say, and it played out perfectly. Jets broke down from the 200 exponential and simple. We now have a negative slope on the 200 exponential and simple. We have a breakdown, a retest. I expect continuation to the downside on this trash bag, piece of trash, trashy trash, Jets. Hail, again, absolutely pathetic, slightly more bullish than Jets, but it's basically just the second ugliest girl at the party as it has broken down from the 200 exponential. We have 821, we have the 200 exponential all slope to the downside, cross to the downside, 200 simple, rounding out, rolling over. This is what a market top looks like. The 200 exponential crosses above, we get parabolic move to the upside. The 200 simple crosses above, we are getting ready to have an absolute violent dump to the downside. We are seeing a little bit of bullish divergence taking place. We have one drive right here. We have a lower low here. We have a higher low here. We have a slightly higher low here and a little pathetic attempt. So we could see a pushback up here back to $60 before this lets go. But again, pathetic, and I would expect it to underperform. And that was Hail. UPS is next. Broke down here, back down, literally within a penny of the target to the downside, the overshot of the 200 exponential and simple. Are we going to get that pushback up now to close the gap? Is this the exact move that we talked about in our last video? Were we going to get the move to close the gap to the upside? Were we going to get the move to close the gap to the downside? Well, exactly what I said happened. We're in a bearish trend, the 821 moving to the downside, 200 exponential below our head. We came down, we filled the gap to the downside. So now if this can gain any strength, we get like a little holiday scalp here over the next couple months, over Thanksgiving, and basically get that move back up to close the gap to the upside. Again, I would expect it to underperform as UPS looks like absolute shit. But again, it doesn't look as shitty as our next one. The absolute trash bag, most trashiest of all the trash bag transportation sector, FedEx. And what did FedEx do? It literally did exactly what we said. Rolled over and died. 200 exponential and simple, we are below it. We are angled to the downside. We have a cross to the downside. We overshot the Fibonacci 236 with this pathetic gap down dump right here. Literally, CNBC was talking about FedEx is great. I'm buying the dip. I'm buying the dip. Well, it just dipped again. The dip took a dip, and now it dipped your ass right in the losses. So we have now overshot the 236. We saw a higher level of volume come in than we have seen in a single daily candle since all the way back here at our little top back in September of 2020. So now we have the most volume coming in on a dump right here. We have broken down from key support here. And again, this looks exactly like a double top rolling over, change of trend. And it looks like we're going to be heading down here sometime over the next few months, or possibly we see some strength throughout the end of the year and then it sells back off. But expecting us to move down to 179. And what was our earnings? Oh, it was exactly what I said. It was an absolute miss, a surprise of 10.37%, a 51-cent miss, as once again, total shit. I don't know how people are pretending like this is good. There was no reason they should have missed their earnings back here. It was only by a penny, but they literally came out and said, we can't figure out what's going on. The demand is down, but everything's great. Sure, I'm sure it is. The only reason the economy even looks moderately decent right now is they have jacked up the prices on everything to make up for the lack of demand. So when somebody like FedEx or UPS comes out and says, we can't figure out where all the demand's gone, it's because they didn't jack up the prices, or if they did, they didn't jack them up enough to fill the gap between the lack of demand and the increase of prices to make it look like shit is still okay. But it is not good. It's not healthy. The world economy is shit. The US economy is shit. Everything is shit. It's fucking hilarious. All these stupid ass people don't know what they're talking about. And this was our request from last week, and then we'll take a quick break so I can catch my breath and grab a drink. MGM, One of the few things that was able to remain strong throughout this trend, came back up here, retested the top of the range, did not even get down to the 200 exponential and simple. We are seeing some weakness though. We did close above that key resistance of $43. Looks like there is potential for continuation to the upside. But again, I'm very skeptical right here as it very much looks like we are putting in a topping pattern at our key Fibonacci level. But there is a possibility this keeps moving back to the upside. But what I don't like about it is from our low right here, we moved up, basically put in a high. And then after we put in these highs right here, we came down and we took out that low. So what I need to see from this before we can legitimately get bullish and just expect continuation, it really needs to take out on a daily or weekly close the $44 level. At which point in time, if it takes out 44.13, by all means, it just looks like a low, a high, a higher low, and then a higher high and continuation to the upside. But we have to be very careful as this is potentially looking like a topping pattern as well. MGM Grand right now, casinos are not doing particularly well. MGM has dodged a lot of the bullets, because it's not in like the whole China clusterfuck right now. So let's take a quick break and I'll be back in like 2 minutes. I got to grab a drink. I spilled mine like right before we started today. So, and then I'll jump back in the chat as well. See you guys in about 1 minute. All right, fan-fucking-tastic. Let's roll. So what's going on, Trader Bill? Billy J, I should say. Good to see you, my man. Glad you could make it today from across the world. Apollo the Great, welcome, my man. Don't recognize the name. Love your analysis and especially your rants. Yeah, people do love the rants, man. I used to like not rant as much, but honestly, I think people love it. Well, I know people love it because they always tell me they love it. And if they don't, get the fuck out of here. What do you think about the possibility for a major FOMO melt-up happening before a major crash? Also, any thoughts on the DXY's near-term future? So as far as the major melt-up before the crash, I definitely think that's a possibility. I've discussed it many times in the past and have actual targets like potential for the Dow and the S&P. Matter of fact, we could take a quick look at those. I will pull them back up on the screen here. If we go to the monthly real quick, and then I take off the auto function and scroll up here. My long-term melt-up scenario is basically this. This was the 1900s back here, this little channel. And then we like broke out of the top of the channel and then literally like melted up, went absolutely parabolic right before the Great Depression. This was the Great Depression crash. Like that was like the roaring 20s, basically. We broke out of, what was that? That was 1927 roughly. So the end of the roaring 20s, we broke up. And then obviously like 1929, you know, Great Depression, like into 30, 32. And then we proceeded to act inside of this channel since then. And then essentially we were inside the lower range of the channel here. And we had a similar situation where we went sideways and then broke out. And then once we broke out of what amounts to the heart line of the larger channel here in yellow, we did the same thing again. We had like a melt up, full on parabolic right here. And then we came all the way back down and retested 200 exponential and simple. So now I told you that so I could tell you this. You know, if you imagine now that this red line is the equivalent of the purple line here, and the blue line here is the equivalent to the blue line here, you know, we basically break out of the top of this pattern right here, which we're, you know, essentially doing right now. Let me get this a little adjusted, which we're essentially doing right now. As you see now, we've broken out of the top of the purple. And now like basically the melt up or like the parabolic uptrend, if we were to just do that, would be the Fibonacci extension target, the 2.618 Fib extension or the 2.236 of the move right here. So, you know, that's my target, my final end game, like super cyan for the Dow Jones in the event of just an absolute melt up is roughly somewhere in between, you know, 47 to like 51,000, 52,000. So, you know, that would be literally the scenario you're asking about. You know, just an absolute, you know, crack up boom is the term that's often used, or just like full on blow off top. And I still think that is 100% a possibility and in the cards. And then for the S&P, you know, it's basically the same thing. Basically the same thing. You know, we essentially went parabolic here, sold off massively in like 2000, bottomed in 02, came back up, put in a lower high double top, and then bottomed in 2009 after the mortgage crisis. And now here we are inside this channel for the whole time after that, operating inside the top of the channel. The CVD dump took it down to the bottom of the channel for the first time since it started back here in 2009. And now here we are at the top of the channel right here. So if we were to literally just do the same thing again, which you'll notice here, we did not break out of the channel when we did this previously. And the same thing if you count this little mini channel right here. But if we come back up to the top of the channel, that would be our 1.618 target and slightly higher, which is basically where we got to already. If we were to go parabolic and break out the top of the channel, that would give us our Fibonacci extension target. This is basically, I put these in play because this is my expected target for where this cycle ends, where this, you know, 100-year parabolic cycle goes to. We don't have to get there, obviously, but if we did, it has my target here at the 2.236 at roughly 577 or 5,800 roughly to like 619 or like 6,100, somewhere around there, roughly. You know, it doesn't have to be perfect. And again, the longer we're looking out and, you know, assuming targets, whatever, the less accurate it's going to be. But, you know, and then same thing for all the other indexes as well. So I definitely think, you know, the answer to your question, I guess, is yes, I definitely think that there's a possibility that we get a crack up boom before a major crash. You know, something to the equivalent of, you know, the roaring 20s. It's all about liquidity for the top like 0.1% or whatever. If they're able to get out at their desired levels and crash the markets so they can come back in Great Depression style and own everything, they'll do it. But if they want to keep pushing it to the upside, you know, they're going to do that. So it's really about just having targets and understanding either one is a possibility. Neither one is a certainty. But, you know, we're like little detectives here on the charts. We're not trying to like figure out like, what was that movie? Minority Report. We're not those guys. We can't see the future. We're not able to like have premonitions and figure out who's going to commit a crime before they do it and then stop the crime. That's not us. We're the other guys. We're like, you know, the detectives trying to see the clues and solve the murder. So we look for the clues from the market makers, from the rich, from the elites, from the 1%, from, you know, whoever's in charge, from the algorithms, the bots, whatever's determining everything. We just look for the clues, and then we try to solve the murder. But we can't stop the crime from actually happening. And that's where people get confused with these markets is. You can't stop the crime. You just got to figure out who the murderer was. Oh, and remember, if you're just tuning in, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I'm about to jump into the DXY in a second. That is our next chart we're looking at, Apollo. So let me just run through the rest of these questions, and then we will do a short and long-term chart on the DXY. Thank you. Awesome description of how markets top. Yes, of course, my friend. Always either a blow off top or a rounding top. Sometimes you see like a double top, or a double bottom, like Adam and Eve, where you see a combination of a rounding top or bottom with a blow off top or bottom. Don't always have to be exactly at the same level as well, too. Ibiza party. Hell yeah, man. Shit. Hey, might be Ibiza. It could be anywhere. Who cares? Somewhere on an island away from all the plebs. David Morelli says, thanks for the insight for sure, my man. And then one more from Apollo. Makes sense, especially when money velocity increases when we're fully open again. Now, just watch what you said there. Makes sense, especially when money velocity increases when we're open again. Okay? Because the question is really, makes sense, especially if money velocity increases again when we're fully open. Okay? Because it may never increase. Because what happened during, what happens during lockdowns or periods of uncertainty, like the Depression, or like world wars, or hyperinflation periods, or long periods of unemployment, or any kind of potentially traumatizing event that changes the way you think, sometimes you don't recover for generations. So a lot of people now have never suffered through hardships, but people that went through the 1920s, depending on your age or whatever, maybe your great grandparents or grandparents or whatever, those people saved every jar that they got from everything they ever bought, every bag, every paper, everything, because they were so used to having to basically hoard things because they still had value to them, so they wouldn't have to go out and buy it. And it took how many generations for people to basically get away from that and break through it? And I'm taking it from the American standpoint. There's other countries that are going through that now, that have been going through that. And then there's other countries that, haven't ever experienced a time like that. But the fact of the matter is that once that psychology changes, once that mentality changes, once that uncertainty enters into your life, your spending habits change permanently. So there is a legitimate possibility in the free world, in the United States, in, first world countries, in the entire world. There is a legitimate possibility that over this last year to 2 years, this whole CVD lockdowns and the assault on freedom and the, fear mongering of, disease and death and, the sunlight and, whatever has changed in people's mentality, there is a possibility that it never goes back to how it is. Because how many years did it take? People argue that the economy never recovered from 2008. So you could argue that it took from 2000 to 2021 or 2020, whatever, to get people so euphoric that they were just spend record numbers of debt, credit cards, buying houses, buying cars, everything. So you could argue it took 20 years to get to that point of comfortability and optimism and euphoria. Or if you just say, okay, well, we had the crash in 2008, and then from 2008 to 2021 or 2020, whatever, that's still 12 years of just absolutely euphoric conditions, and I'm not saying everybody is the best they've ever been in 2020. Some people are already struggling. Some people are still struggling. Some people are doing better than ever. But overall, for the majority of the United States and most first world countries, there was basically somewhere between a 12 to 20 year period of just absolute bliss and euphoria that got people so comfortable with spending that they were going to own 2 houses and 3 cars, and their kids were going to go spend $70,000 a year to learn underwater basket weaving, and all the bullshit that has happened, and all the full-on retardedness of society took literally generations of, basically just easy life and conditions and situations. So there's a legitimate argument that we don't get back there. We don't get back there anytime soon. And you look back at the 1920s and it's oh, it was the roaring 20s. It wasn't until the Great Depression when things got bad. Well, that's not true. If you look back at the 1920s and you really look into them, there was literally there was 3 to 5 recessions that took place during that time. There was greater wage gap and wealth gap and, poverty taking place throughout that entire period. So it really was a situation like what we have right now, where a lot of people are doing better than they've ever done, and a lot of people are doing worse than they've ever done. So it's like that separation and like the anxiety and the like, you know, riots and protests and, you know, racism and sexism and I'm not sure what I amism and all the shit that's going on right now. You know, a lot of that same stuff was going on during the 1920s. So in the history books, sure, you look back at the history books and it's like, oh, the roaring 20s. Well, who wrote the history books? Probably not the people having a shitty time, probably the rich people that were absolutely crushing it, or the people that want to manipulate, you know, what was really taking place because they're involved with the creation of the Federal Reserve, which essentially led to, you know, the roaring 20s / you know, Great Depression. So there's a strong argument that we will never get back that same money velocity again. And when you look at the money velocity numbers now and how they've been cratering, and then you look at the amount of money that's been pumped into the system, and then you look at the amount of small businesses that have closed down, you look at what the streets look like when you go walk around, you look at, you know, people's spending habits already, we might not ever get that same money velocity again. And if we do, it might take 10 years, 20 years, 30 years, 50 years. So the real, you know, and again, my only point being with that rant is that the if is the key part of that. If the money velocity gets back to that level, if, because I don't know that it will. And honestly, I don't think that it will. I think that there is a higher probability right now that we see a massively deflationary, depressionary, recessionary period happen before we ever get back to that euphoria. You know, and I think if there is that level of euphoria, it probably is hand in hand with hyperinflation, which is probably how this all ends. I mean, it either ends in the end with the Great Depression or, you know, a crack up boom, hyperinflation. And the likelihood of the hyperinflation, to me, is much less likely, because if we have hyperinflation, that's probably going to wreck the whole world. If we have a depression, there's a possibility that the system survives. So now looking at the dollar right here, this is exactly what, you know, short term on the daily. Let's take a look at what's happening. You know, we basically had a blue slope line right here, came back up, retested it, had bearish divergence take place, got rejected, sold back off to the 200 exponential and simple. But when we look at this on a longer time frame, we go back and we look at the cross down in May of 2020, the 200 exponential and simple slope to the downside. We revert to the mean right here, attempt to get back above it, fail, put in a double bottom, get back on top of it, come down and retest. The first time we hit the 200 simple right here, we get above it, then we come down to the 200 exponential, then we come down again to the 200 exponential. It's possible we come down again and retest the 200 exponential or even the 200 simple. But the fact of the matter is, we now have a 200 exponential slope to the upside, 200 simple slope to the upside. If you're not familiar with this indicator, this is one of my proprietary indicators, the TJD Master. Not available, unfortunately, to the masses, only through the trade group, or, you know, basically it's just a perk that I have to them. But essentially it changes color as the slope line of the 200 exponential and simple change, and then it changes color green as the 8 and 21 cross. And just to give you an idea, the actual purpose of this, if we just turn off the actual price action, the candles, it just makes this so clear. You can very clearly tell when you see the blue lines to the upside, you're in a parabolic uptrend. When you see this period right here, your sideways consolidation downtrend. When these flip over green again, and we see the blue right here, parabolic uptrend. When everything is red or pink, downtrend. When everything is blue and green, uptrend. When everything is red and pink, downtrend. So now what is this? It's the beginning of this period right here. It's the beginning of this period right here. You know, it's the beginning of, you know, essentially, if we went back further, the beginning of this period right here. Not sure what the fuck is going on here. Yeah. So, you know, you can see that's like the beginning of these parabolic uptrends. So, I don't know why. Oh, maybe because I have the price action off? Yeah, okay. But yeah, that basically just to simplify it, and that's how I determine trend. So, once we basically did that and we flipped this up over right here, that tells me the dollar is getting ready to go parabolic. And then when we turn off the indicator, indicator oscillator, and we just look at the actual like drawing tools that we have right here, we see we have basically a left shoulder, head, right shoulder, which is an inverted head and shoulders, and then the break of that shoulder line, which we did, came down and retested it, and now we're technically beginning to break out. The measure move of that would potentially take us between 96.50 and 98. And then also you'll see here, arguing that that's not the pattern we're paying attention to, or maybe you don't see that or you don't like it or whatever. We can just take that off really quick and look at this right here. We have a rounding bottom or an Eve pattern, and then we have a sharp atom pattern, or basically a double bottom scenario here. And then we have the neckline here in white, which is based off of a key Fibonacci level. And then now we have broken through. We've basically just been eating through the sell orders at this neckline here, touched above it, and now here we are above it again, and it looks like we're getting ready to break out to the upside. So no matter which one you're looking at, we basically have what amounts to, bullish divergence, two different bottoming patterns, and then a breakout of the neckline or of key resistance. And then when we just kind of zoom out here on the longer time frames, well, what are we seeing here? Well, just on the daily, we have a bottom back here in 2018, and then we basically came down to a slightly higher bottom, or same bottom here again in 2020. So what was this? It was like a bullish consolidation period before we just go much, much higher. So, when we really start looking at the longer time frames here, and we can switch over to our weekly now, turn back on the 821 and the 200s. We'll turn off our drawing tools, and we'll see here, we basically went into a downtrend back here in 2002. We were in that downtrend until we crossed back over in 2011. So we had a 9-year downtrend. Then we went into an uptrend here, and then we potentially entering back into a downtrend because we have broken below the 200 exponential and simple. But what's happening now? We're retesting them, attempting to get back above them like we did right here. Now we have both slope to the downside right here on the weekly, so we have to be careful. But what we saw take place was triple bullish divergence on the weekly. We crossed above the zero line, above the slope line, and now the slope line is blue. We entered into the bullish control zone, and we see the 821 cross to the upside. So we're at least expecting a retest of those levels. But I suspect that what's going to happen is we're going to break back above those levels. We're going to break through what amounts to the double bottom between these 2 points right here, and then we're going to come back up and test the top of the range. Now, do we top out at 100, or do we break out to the upside like go parabolic? Well, again, we don't know for sure, but we can get clues from the chart and see if we can solve the murder by looking at our next time frame. So when we go to the monthly right here, we'll notice something very important has happened here on the monthly. For the first time in existence, going back to the 1980s, since Volcker, massively inflated like the interest rates up to like over 15%, we see that the dollar has been in a very clear downtrend. We have a high here, we have a lower high here, and a series of lower highs here. We have a low right here, we have a lower low here, and now we need to see what happens. We're essentially in the middle of an internal retracement. But what are we seeing take place now for the first time? Well, we're above the 200 exponential. So what happens when we look at those shorter time frames? Once we break above the 200 exponential and the 200 simple, we come back down, we retest the 200 exponential and simple, the 200 exponential slopes to the upside, and now here we have confirmed the slope on the 200 simple to the upside. And we're very close to getting essentially that 821 cross back to the upside. So what is this telling us? It's telling us that on a monthly time frame, we are already entered into or starting to enter into a massive long bullish uptrend. So based on this chart right here, if you waited until we were below the 200 exponential and simple in 2003, and then you said we've been in a downtrend that entire time until we flipped the 200 exponential and simple back to the upside, from 2003 to 2019, we were in a bearish downtrend. So we spent 16 years in a bearish downtrend on the dollar. And now here we have started, basically confirmed an uptrend on the dollar back here in January of 2020. So is it going to last for 16 years? Maybe not. Is it going to last for 1 year? Probably longer than that. 3 years? 5 years? 10 years? Who knows? Is it going to put in a new all-time high? I don't know. But what this is telling me is that the dollar is about to literally rip everyone's face off, crush everyone's hopes and dreams that's not on the right side of this. And as far as I'm concerned, with the exception of basically like Brent Johnson and probably one other person on existence of like the entire world, no one else is bullish on the dollar right now. Everyone else is bearish on the dollar. Everyone else thinks it's going to zero. The entire narrative from the government, from the Federal Reserve, from everyone everywhere in all of existence is the dollar is going to zero. They can't print all this money and it's trash and blah, blah, blah. Well, the wake-up call is everyone has printed a ridiculous amount of money. All kinds of countries have done this. The IMF literally gave out money to everyone that couldn't print money. The Chinese yuan, whatever, they printed their money. We printed our money. All kinds of people printed all kinds of money. The IMF gave everybody money. Everybody's doing it. So are we the cleanest shirt in the laundry bin? Are we the cleanest pair of underwear in the laundry? I mean, arguably no, but is this probably like telling us that the dollar is about to be strengthening for months, probably years, maybe decades? Sure looks like it to me. And then when we look at the actual chart right here, and we look at our actual long-term Fibonacci's levels and what's taking place here, we'll see we have a very clear channel to the downside here with a top roughly at 110 on the dollar. We have a very clear bottom right here at 77, again right here at 72. That was our double touch bottom right here. That was our double touch top right here. So here we have the heart line through the middle where we obviously ran into resistance and could not get back above it. Got above it, tested it as support, broke to the top of the range, again, broke down, retested it, couldn't get back to it, came to the bottom of the range, came back up, couldn't get to it, broke through it, retested it as support, came up here, put in a lower high, came back down, retested it. That was our bottoming pattern that we were discussing earlier. So what is the most likely thing that's going to happen right now? Well, we're probably going to go back up to the top of the range. Everything is telling us that we're going to the top of the range. And then when we look at, you know, basically our Fibonacci levels, well, let's start with the red Fibonacci. That's from the top of the range here to the bottom. So that's our all-time high. That's our all-time low. And where did we top out right here? Let me zoom over a little bit here. We topped out at the 382 Fibonacci in red right here. We came back down, could not get above the 236. When we broke through the 236, we came up to the 0.5, started oscillating around this range, made it all the way back to the 618, came back down, retested the 382 perfectly. What is happening right here? Bots and algorithms are technically trading the dollar perfectly, beautifully, touching exactly perfectly all of these key Fibonacci levels. The double top was at the 618. You know, we see obviously support and resistance throughout the 0.5 here, and then we double bottom here at the 382. So if this fails, we probably head down to the 382 and maybe back down to the 236 at 81. But everything is telling us on a longer time frame, we're more likely coming back up here to 102 to retest the 618. And then when we break through that, we're going to test the top of the range right here. We're going to test potentially our zero target right here. This is not a valid Fibonacci right now. It is just where I suspect that we will top out. We could easily move up higher right here. We could easily top out right there where I had it. You know, but we don't know until it happens, obviously, which it has not yet. But in my opinion, very, very likely. We're seeing a ton of confluence with the white Fibonacci's where I have them placed, but it looks very, very likely that we're headed up to 110. And then when we look at our, we've already looked at the TJD master, but when we look down here at our indicator oscillators at the bottom of the range, I've done this quite a few times, and then we'll keep moving on. You know, we basically enter into the bearish control zone here in green. We get a move to the upside, break, hard buy signal, and then a move comes back down here, bearish control zone, break, hard buy signal, move, bearish control zone, 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 hard buy signal. So we're probably going to get a move to the upside. And then if we just look at those moves, you know, in general, we have basically a 13% move here. We have roughly a, you know, 20-something% move here. We have roughly a 40% move here. We have roughly a, you know, 16% move here. So what are we going to get right here? Probably somewhere between a 10 and 40% move to the upside. So if we get a 20% move to the upside, that takes us up to our target right here. Could it easily overshoot, break out of this channel and go 40% to the upside or 100% to the upside? Sure. But is counting on a 20% move to the upside pretty reasonable? In my opinion, yes. So that's what I'm looking at. Obviously based on the hard buy signal and our leaving the bearish control zone and what's happened the last 5 times. And then obviously right here as well, we came down here, put in a low at 89, came down here, put in a low slightly higher at 89 and some change, arguably same low. But when we look here at the lows right on our pushes down, we have a low here, then we have a lower low here. That's bullish divergence on a monthly time frame. And then when we look at the TJD master, the TJD TDMACD, we have a low right here, and then we have the same low double bottom here as well. So once again, we basically have bullish divergence taking place, or, you know, likelihood of a move to the upside. We have been in a downward slope on the slope line right here and red for literally years, while this did basically go sideways. That's called a bullish reset. And now here we have multiple months of green histograms in a row, and we are approaching the 0 line, approaching the slope line, and we have momentum in our favor above the 8 and 21, above the 200 exponential and simple, and slope lines all pointed to the upside. So all we need to do is just go sideways here. The longer we go sideways, the more likely it is that the boosters are being filled up, the ignition has been sparked, and we are literally getting ready to go straight to the atmosphere, bust through the atmosphere, and enter into uncharted territory of space. So hopefully that answers your question. So Tesla, doing nothing different, still operating inside the channel, still barely getting lifted up by the 200 exponential and simple here. Still need to break above $781 before I get bullish on this. To me, this is just options driven melt up taking place to what amounts to another lower high. Looks like total shit. I mean, in my opinion, until it takes out this point right here, I think more likely than not, it's going to capitulate to the downside. Uber got a nice push up here because they said that they're going to be profitable. They're finally going to make money, blah, 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 blah. They're below the 200 exponential and simple. They both have slope to the downside. All we did was come back up here, retest the 200 exponential moving average, and then put in what amounts to a shooting star massive rejection candle on the daily right here. What do I expect happens? A rejection. Could we make it up here to 50? It's possible, but I think more than likely we roll back over and end up eventually down at our target of roughly $35. We do have momentum in our favor, but when we look at the knife here on the Jewel Thief, we see the knife is literally at the highest level it's ever been at $117. And what is this entire move up based on? It's literally based on Uber just saying, hey guys, eventually we're going to make some money. Probably, maybe, for sure, possibly. But, I mean, we haven't made any yet. We're not profitable yet, but it's looking good. So, probably not going to be sustainable, in my opinion. Pinterest, sold off down here. Just put in another new low. Since we put in the high, we have literally just been putting in lower highs and lower lows. And here we just put in another lower low. We are starting to gain some kind of momentum to the upside above the slope line. Bunch of green histograms, but I really got to see at least get above the 21 and this cross to the upside before I can expect us to come up here to our $60 target and then potentially to close the gap up here at like $70 or $71. Still looks absolutely terrible. The 200 exponential and simple both slope to the downside. Pinterest looks like shit. Wish looks terrible. New low right here again. Again moving to the downside. Breaking down below the 2.618. Showing absolutely no strength. Not really seeing enough bullish divergence that it looks to me like we're bottoming right here. Just pathetic. Possibly coming back up here at some point in time to close the gap, but at this point in time, I just expect this to keep melting down before it ever gets that burst back up. Airbnb, still in the middle of that trade right there, almost to our 15% target. Close, we're getting there. 174.50, 175. Still looks okay. Still in that one. Vodafone broke down from that key support level, came back up, retested as resistance. Looked like this thing is about to roll over. It's about to look like a big bloody waterfall. Below the 200 exponential and simple, sloped to the downside now. Looks like absolute trash. Has not put in a new high since 2000. Remember, it is the micro strategy of communication. It is the XRP of cryptos. It is the dash of cryptos. It is the trash of markets. Bumble, again, still just operating inside of our ascending triangle until it breaks above, confirms, and sees continuation above $57.50. This still looks trash to me. It is a bullish pattern. We did operate basically in a descending triangle. Now we're operating in an ascending triangle. But until we see something actually take place, a break either to the downside or to the upside, I have no interest in assuming which direction this will break. Although technically, it does favor a move to the upside, but there's also a ton of selling pressure above us as basically, once we broke down from that level, we were essentially like net negative. And, this thing has essentially just sold off since its existence. We had a nice little scalp up here, 42% move a few months back, but as far as I'm concerned, still not touching it. Baidu, all the Chinese stuff looks like total trash. Baidu looks okay compared to the other trash. It's like an old sandwich that you threw out yesterday in like a trash can full of like a week old garbage. Total shit, total garbage, total trash. But it's like you know, the freshest of the trash in the garbage can, if that makes sense. So, you know, below the 200 exponential slope to downside, below 200 simple, neutral slope, barely. Tried to cross the 821 to the upside, could not even get a move up, and now it looks like it's failing. It's crossing back to the downside. It does have a blue slope line. It's trying to pick up some momentum. This looks like, to me, a pathetic attempt to try to rally off of some previous support back here from like 2020. Looks like it's literally about to die. And if you don't believe me, we can go to the weekly chart and see what did we do. We broke down below 200 exponential and simple. We lost the slope on the weekly 200 exponential and simple. We retested the 200 exponential as resistance, and now I expect continuation to the downside. We do have the bullish buy, sell, buy in the bearish control zone symbol, signal and weekly green histograms, but we're below the 200 exponential and simple. We have 821 cross to the downside, and all of them are red. So as far as I'm concerned, it's a counter trend trade, and I have no interest in it. And then when we go to the monthly chart, we will see that we now are below the 8 and 21 on the monthly, and they are getting ready to cross to the downside. The last couple times that happened, and we got the 821 cross to the downside, we saw Baidu put in, you know, what amounts to a 28% dump from the cross. Here at the cross, we came down and put in a 46% dump at the cross. From this cross right here at the cross to the low, we put in a 62% dump right here. So do I want to be involved in Baidu when it's right about to cross to the downside and I'm expecting a 25 to like 60% dump? No, thank you. No, thank you. There's a lot of instability and, you know, questionable things going on in China right now. So do I want to catch a falling knife when every other time what's about to happen happened? It was 26 to 60% to the downside? No, thanks. I'll leave that to the newbies. I'm buying the dip. I bought the dip again. I bought the dip again. Fire sale. And then all of a sudden your house burned down and you're like, oh no, the fire sale caught my house on fire and now I'm homeless. That's what happens when you buy the dip and you don't know what you're doing, in my opinion. But I mean, maybe get a little scalp in for like 8% or 10% or whatever. But I'm not going to pick up pennies in front of a steamroller. I'm not going to jump in front of a train to save a butterfly. Not my style. Alibaba looks terrible as well. 200 exponential and simple are rolled over. This thing has been melting down. You know, not like this is any surprise. I literally told you guys, what was it? Back, I can't even remember. We've been at this thing so long. I believe it was right here at $256. I told you I was out of Alibaba. And then once we broke down from here at $230, I told you I was no longer interested in Alibaba. We had broken structure and that this entire setup and potential was invalidated. We broke down from a key trend line going back to 2015, this green trend line here. And since then, what has happened? We literally melted down. We now have hit our measured move that we expected almost perfectly within a couple dollars right here. Am I going to buy the dip right now? Am I going to jump out and take a stab at this thing based on this little bit of bullish divergence taking place? No, thank you. Not interested. Not interested. If we look at the weekly as well, turn off the drawing tools. We are below 200 exponential and simple. They are sloped to the downside. 8 and 21 across the downside. This thing looks like it's melting down. It is dying. Its throat has been slit. It is literally just in the process of bleeding out. And then finally, when we look at the monthly, sure, I'm buying the dip. Look at that. I'm buying the dip. Look at that. I'm buying the dip. Look at that. So what's next month's candle going to look like? Probably equally shitty. You know, do we find some kind of support right here at like 133? Sure, maybe, but we just saw how many months in a row of red histograms, hard sell signal. We're about to enter into the bearish control zone, and we have a red slope line on the monthly. This is probably one of the worst long-term charts that we have. Almost no other assets in existence other than Chinese assets look this bad based on technicals, not based on the Chinese Communist Party being a piece of shit government. Based on literally the charts, investing in China right now is the worst possible thing you could ever do. Ever. I mean, unless you're just amazing at picking the bottom. But the likelihood is, you know, 1 red candle, 2 red candle, 3 red candle, 4 red candle, 5, 6, 7, 8. 8 massive red candles capitulation, and this thing has lost over 50% of its value already. And then there was 1 itty bitty green candle and like a couple little neutral ones. So what's the likelihood you're just going to guess the bottom? You're just going to pick the bottom and it's just going to go parabolic to the upside? Probably not good. Probably this thing is going to sell off. I would not be surprised to see this below $100. But again, we can, once we see some kind of life out of this, maybe we can get bullish on it again. Maybe we can dabble in China again. Maybe. But right now, no thank you. Hard pass. 10-cent music, TME. Again, another just trash bag China stock, putting in all-time lows, new lows, capitulating. Looks absolutely terrible. If we look at the actual 10-cent chart as well, looks absolutely terrible. They all look terrible, with the exception of two. Diddy looks blah. It looks not quite as terrible, but still pretty bad. But again, all it has ever done is sold off. And just for like a little reference for people that have not seen me do this before, this is when people basically, this was the price it came out, 1664. So anybody that ever bought here, this is all people that bought that are down. Okay. And then there's one green candle here where somebody could have bought that they're not negative. And then there's like 3 little candles here, 3 days where somebody could have bought where they're not negative. And then maybe like 1 or 2 here. So basically all losses. And then there's like 5 opportunities where you could have bought where you're basically like neutral. Everybody else is down. So what is the likelihood we're ever going to be able to grind through this area anytime soon while the rest of China is like dying and capitulating? Based on the stock market, not the actual people. We don't know about that because CCP won't tell anybody. But, probably not the place I want to put my money. But again, that's just me. And then Kanzun Limited, probably the best looking stock that we'll look at based on China. This even looks better than or equally good or not as shitty as everything else like NEO. We did get back above that blue line right here. Very key support. If we hold above this, there's definitely potential we come back up here. If we get a daily close above $42, by all means, it will look bullish. It will look like, quote unquote, a blue sky breakout. But again, for me, if I look at a market and an entire country's stock market and 95% of it looks absolutely terrible, I probably don't want to pick, I don't want to try to pick the 5% that don't look as terrible and invest in them. It's just not, it's not my strategy. My strategy is not to just pick the best out of the losers. I would rather just pick winners. So JD broke down below 200 exponential and simple, rolling over. Both of them have a slope to the downside. Looks absolutely terrible. Looks better than most, but again, still terrible. NEO broke down below the 200 exponential and simple. Looks terrible. Looks like it's literally getting ready to die. I think people forget that this thing was dying from 2018 to 2019. The CCP stepped in and saved this when it was $1. It was $1.25. Let's say $1.50. It was $1.50. They literally nationalized this, and then it ran up to $65, and now it's at $35. So it's lost 40% of its value after it went up, 40x plus. So does now seem like a good time to buy after the 821 have crossed the downside and it's basically just barely hanging on to support right here? Or does it seem like it could maybe sell off massively? I mean, I would not be surprised to see NEO sell off to $8, $9. Would I be interested in buying then? Yeah, probably. But right now, this thing looks so shitty. I mean, it looks good compared to all the other absolutely horrible stuff in China. But yeah, no thanks. No thanks. And I mean, who knows what's going to happen with China? What if the whole world decides inconclusively or decides or finds or gets some evidence that they did in fact know about the CVD and unleashing the plague on the world intentionally, unintentionally, or just unintentionally but not telling people? Who knows what happens to the markets then if everybody, just says we don't want anything to do with China. And again, not Chinese people. I have no problem with Chinese people, but the CCP obviously is a piece of shit. So EDU is next. Still looks terrible. I took a little scalp right here trying to see what happens, but can't get back above the 821. We'll see what happens. I mean, it's trying to pick up some momentum right here. There's potential for a burst to the upside, at least to $3, if not maybe $5 to close the gap right here. Not a high conviction trade. Let me put it that way. Again, absolutely terrible, but sometimes when the risk reward is this ridiculous, I'll throw a couple dollars at something. But again, not too optimistic at this point in time. Peloton doing exactly what we expected, exactly what we predicted. Basically had this run back up here to the 618, based on its absolutely phenomenal 9-cent earning beat, and, ran up after its phenomenal 9-cent earning beat, and, retraced to the 618 and a 58% move to the upside on a 9-cent beat. Absolutely phenomenal. And then what happened after that? Well, unfortunately, they had a 61 cent miss, 139% miss, came back up here. What happened? Well, it came back up, got rejected off the 200 exponential and the 200 simple. They are now sloped to the downside, and now we got rejected at the 0.5. So we have a high here and a lower high. So we now have a high, we have a lower high, we have a lower high after that. And now we have taken out the micro low right here at the 236. So we're headed down here to $81 to take out that low as well. Peloton is a total piece of shit. They're total trash. They're garbage. Their model is garbage. Their bikes are garbage. And they literally have more headwinds than everyone else because they're under investigation by like the SEC and a bunch of other government agencies, which never works out well. So regardless of how great they do, they're going to be paying out millions and millions of dollars to the families of the people and pets that they have killed, as well as the government agencies that are not happy with them. So what do I expect Peloton to do? Probably roll over and die. I would expect it down here at $70. Oh, and there was also the sweatpants. So that was bullish. They're going to make their own sweatpants and hoodies, guys. So that saves the chart. It saves everything. Peloton is a win. No, it's shit. TSM, Taiwan Semiconductors, triple topped here as expected. Coming back down here, broke down below 200 simple. Almost got down to 200 exponential, but more than likely going down to $170. As far as I'm concerned, we are just range bound trading right here. 200 simple is above the 200 exponential. We stay below here long enough, we're going to get the cross to the downside. We're going to get the slope rolling over, and this thing is going to eventually die. When we break down from this range, what's going to happen after that? Well, we'll just look at our measured move. Is it possible we break to the upside? Sure, anything is possible, but more likely than not, and keep in mind that Taiwan and TSM actually is responsible for like 95% of the world's semiconductors. So everybody else basically just like buys their semiconductors and like rebrands or modifies them. So keep that in mind, that this represents what's actually taking place in the semiconductor space more accurately than most other things. So if we do get the breakdown from here, that's going to take us down to potentially like a measure move of 90. And this looks bad. I mean, it looks okay for now, but it looks like it's about to be bad. Is it possible we get picked up like this and then cruise back to the upside? It is definitely possible. I mean, I'm hopeful for that because it probably means the economy in the world is recovering, but seems very unlikely at this point in time. Intel next. Intel looks like total trash. Here, the CNBC people pitching Intel. Intel's a great value. It's only $53. Well, they're obviously morons. Let's just take a look at Intel. Intel put in its all-time high back in 2000. 21 years later, it still has not taken out its previous all-time high. So it took 21 years to get close to its all-time high. And now what's taking place on Intel, the piece of shit stock? It has triple bearish divergence at the top of the range. So what is going to happen? It's probably going to revert to the mean, retest the 200 exponential on simple. I expect Intel at $37, after which we get a bounce back up to $45 to retest the breakdown or retrace to the scene of the crime, at which point in time I think the cops will chase it off and we will see Intel down here somewhere around like $25 to $28. Please remember, Intel is a piece of shit. It's total trash. 2 years, 3 years from now, if they build a foundry in the United States and they start like manufacturing here and everything, I could completely change. But over the next couple of years, while that's taking place, I expect this to lose 50% of its value. And if something changes in the meantime, by all means, I'll be the first one to admit it, to accept it, to invest in it. But right now, the monthly 8 and 21 are getting ready to cross back to the downside. And in my opinion, we will be retesting at least $35, the 200 exponential and simple moving average. Intel is total trash. It's garbage. And the only reason people even like it is because they remember the days back from 2000 when it was actually a good company, a useful company. It has literally underperformed every other semiconductor. You could literally make semiconductors in your mom's basement and probably have a better company than Intel. for now. NVIDIA still looks strong. Came back down to the 618. Basically got the bounce. Wait, I don't even know. Oh, what is that? God, I don't even know what that is. Why is there... What is that random fib right here? Yeah, I don't know what that fib is. I'm not sure why that's there. Oh, maybe that was our potential target? Maybe I accidentally moved it? I might have just accidentally clicked on this. I don't know why that red fib is there. Or, oh, you know what? Those are probably old fibs from before the split. That has to be a problem with TradingView from before the split, because it was up here at like $800 and they probably just didn't go away. I probably drew them way back when. Yeah, that makes sense. But yeah, okay. That makes sense. Because it was like 800 and then it split 4 ways down to like 200. And that was like, yeah, that has to be it, right? Yeah, that would make sense. That's what it was. But yeah, anyway, it looks stronger than most do. Breaking down, trying to hang on to the 821 cross for now. The last couple times it averted the cross. It also has some support here, basically where it bounced. If it gets back above here, I think it keeps just melting up. But we do have to be careful because it is very clearly has bearish divergence displayed. And, you know, this thing has just been, it's like one of the strongest stocks. So I think it will perform the best right up until it doesn't. And even after everything, you know, say we just go into this bear market and everything sells off, I think strong stocks like NVIDIA will probably sell off less than most. Like, you know, blue chip type stuff will probably do better than some random shit company that's never made any actual profits. AMD, Advanced Micro, got that burst out 1.618 Fibonacci extension target after it broke through that key resistance back here, the previous all-time high from back in January of 2021, after which it went like full meme stock. Looks like it's putting in basically like a downward descending channel or descending triangle. Came back down, retested the breakout right here on that little wick down, and now it's coming back up to retest 821. We'll see what happens. If it can't get back above this area, basically where it's at, about 105, I expect it to roll back over, come back down to 200 exponential and simple. Should be able to hang on to support at like 95. If it cannot, 89. But let's be real. This thing's worth like 50 bucks. It's way overvalued, in my opinion, based on actual like technicals and also like the company's fundamentals. So SMH, Van Eck Semiconductor ETF, still pretty strong here overall. Again, just trying to stop the trend from breaking down. But we, you know, had a pretty big sell-off here when it broke down. Pretty big sell-off here when it broke down. You know, basically saved it here, but still had a decent little sell-off. So did we come back to fill the gap before we come back down to the 200 exponential and simple? Clearly losing strength on the trend. 200 simple above 200 exponential. I would not be surprised to see this at 240 or 250 bucks. And one of the troubles that these semiconductor companies are having right now is they can't meet demand. So you can't. The value of something can only go up so much if you have a bunch of demand and you can't meet the demand. It's not like a healthy company that's growing and is like constantly making more and more of their product and selling it. There's literally a shortage because there's a bottleneck. Everybody wants everything. And then eventually we'll have to see what happens once like some of that headwind like kind of clears up. So ARK still looks like total trash. This is the ARKK fund. Kathy wouldn't want to be actually, I would, because she's skimming billions off the top of all the idiots that FOMO'd into her funds that literally make you no money ever. Broke down to 200 exponential, could not get back above the 200 simple. 200 simple getting ready to roll back over. 200 exponential looks like trash. Range bound between 124 until 116. Just range bound in here until it finally breaks down. When it breaks down, going to get absolutely rectally destroyed. We had a beautiful trade on this, at which point in time I do expect ARKK back down here at somewhere around initial target $87, but in all reality like 72 bucks. At which point in time maybe I'll be interested in it, but it looks like trash. It's going to continue to look like trash until it doesn't, and then I'll be the first one to let you guys know. ARKF, it's just a trashier version of the same trash. Skills finally got a little bounce right here. You know, we'll see what happens. If it gets back up here and gets above the 886 and starts consolidating, I will probably double down on this one, but just for a scalp to retest essentially like 1585 or potentially as high as 20 bucks. I think it's gonna be very, very difficult to get above our target at like 14 bucks right here. But this first trade setup still in. Oh no, wait, we closed that trade setup out. Oh yeah, no, I don't think. I might have some profits still in here open, but yeah, I closed this trade setup already. I think I left a little meat on the bone here. I think I kept open a small portion of the trade itself. But yeah, that already played out. And then this was the potential double down if the 886 held. That's what it was. And it did not. So could you re-enter right now and try to take that same trade again? Potentially. I mean, we're seeing momentum pick up. But again, you know, below the 200 exponential on simple, slope to the downside. There's no reason, in my opinion, to be putting money into this right now. Not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. TeleDoc looks like trash still. You know, basically just double bottoming or triple bottoming, trying to, but well below 200 exponential on simple. Slope to the downside. Look like they're getting ready to break down. Trying to put in some kind of bullish divergence to get like a move to the upside here, but I expect it to underperform. Could easily get a push back up to 165. But again, you're counter trend trading. Like anything below the 200 exponential and simple, especially with the slope to the downside, is a counter trend trade. So it should be short and sweet with a tight stop loss, in my opinion, because you're trading against the trend. You're swimming upstream, and eventually the current is going to tire you out. I would much rather sit in a floating donut with a cooler of beer and just float, you know, in the direction of the trend, drink my beer, and use no effort. And that is essentially my trading strategy. Palantir, you know, broke above here. I told you I didn't like how it looked. Came back down. We're now back down below the resistance here. Came back up, tried to get above it. If we break through here, consolidate, and see continuation, we could potentially hit the target for a $38, 38% and $38 target up here. But again, I need to see some actual consolidation and this level hold. This little break right here, break back down, and then it acting as resistance. That to me is a throwover, a failed breakout, and I think more than likely now it's going to break to the downside. So, but you know, I'm not particularly like big fan of Palantir in general. UBX, Unity Biotech looks like trash, putting in a new low right here, well below 200 exponential on simple, slope to the downside. Looks like total trash. This area has to hold. You know, you could argue that there's a reason to buy this area because this was previous support. But if this breaks down, it's just new lows. So yeah, you're buying it at all-time lows. So you're getting a deal on it right up until you're not. And then it's just bleeding out, bleeding to death, continually just selling off and going to zero. So is it worth taking a shot at? Probably not. But, you know, if you're like obsessed with gambling and you don't like pretty girls and casinos and free alcohol, by all means, we could gamble on Unity, but I just don't see it right now. Starts to pick up a little momentum to the upside. There's definitely a trade to be had after it's gotten wrecked. Unity Software, still strong. Came back down perfectly, like to the entry. We got the initial breakout right here. Came back down, retested the 618, held it as support for now. Trying to creep to the upside. Still above the 821, cross to the upside. This thing, I think, probably still goes. Looks okay. Got to be careful, though. Markets are so weak, it's hard to take any longs at this point in time. It's almost worth just taking a breath, waiting for the market to play out, and then seeing if the markets can gain any strength. Because if 90% of shit is selling off, do you really want to even be in the other 10%? Zillow still looks like trash. Absolute trash. Back down here, retesting the lows, pushing back up, trying to get above the 821 for a move to the upside. But, I mean, let's be real. I mean, it's probably coming down to 85 bucks. After that, probably coming down to $64. Below 200 exponential, below 200 simple. They're rolling over to the downside. We already retested them on the break right here. Could we retest them again? Sure. 28% moves to the upside. Definitely a possibility. 4-to-1 risk reward. But, I mean, more than likely, we're just going to see downward pressure after downward pressure after downward pressure. Especially if the housing market starts to roll over and they end up with a bunch of houses they overpaid for and, you know, they're already not making money. Corsair getting wrecked now. We, you know, missed basically the exit point right here, underperformed. Coming back down to the entry. At this point in time, it's one of those things. For me, if this area holds, I'll stay in the trade. If it doesn't, I'm not going to take a loss on this. I'm just going to get out of the way. And then I will look to re-enter at like 23 or potentially like 1850. But doesn't look good. 200 exponential and simple rolling over to the downside. So another one that's just not looking good. Zoom looks like shit. Left a big gap back here. There's definitely potential off the heart line for the gap fill, but it's looking weaker and weaker by the day. Very close to being done here. Could not get back above the 821 right here. Below the 200 exponential and simple, rolling over to the downside. Again, at this point in time, we're in the middle of the range, so it's basically a coin toss. Do we go up 15% or do we go down 15%? Realistically, more than likely down, because the trend is down, the channel is down, we're below all the moving averages, and they are all pointing down. Square basically came down here perfectly, tagged our green box area and the 200 simple. Didn't quite get to the heart line or 200 exponential, but that's why we put the boxes in play. It's a rough estimate of where we'll come down to, but essentially just retesting the center of the range. Can it come up here and break out? Possibly. I think more than likely it continues to just be range bound. I would rather take an entrance at the bottom of the range. 200 simple is crossed above the 200 exponential while it's still on top of them and they are sloped to the upside. This still does not look great to me. I think more likely than not, now that we have broken down from our ascending trend line right here, maybe we come up, maybe we retest it, retest the top of the range, and then we roll over back down to like low 190s. But looks better than most of the charts we've looked at today. PayPal, again, has an ascending trend line here. 200 exponential and simple. Sold off, came down to our blue box area. 200 simple. 200 simple is crossed above the 200 exponential. This thing, once again, been range bound, range trading. We hit 2 nice trade setups on this thing. So at this point in time, I'm not touching it. I'm waiting to see how it plays out because I have a feeling that after that little break right here, we're going to see some weakness and then eventually at least some kind of test. I would not be surprised to get this thing back down at 222 again. So we'll see what happens. Stronger than most, but still weak. eBay got the breakout, got the retest finally. Came back up here, all but hit our target perfectly to the upside. Now showing weakness, trying to hang on to the 821 cross, but again, it just looks weak. It looks like it wants to roll back down. If the $65 area holds, I'll probably take the buy again off the 200 exponential and simple. Is it going to hold though? I mean, I don't know. This markets looks so terrible right now. Like it just seems reckless to try to take longs at this point in time. I mean, in my opinion. But I mean, I don't like holding the bags. I mean, if you're the type of person that wants to stand around holding luggage for somebody, while they go off and have fun, by all means. Me personally, not looking to be stuck with a bunch of baggage. Snapchat, I was wrong about this one so far. I really honestly thought this was going to break down here and come back down and fill the gap. But you know what? That's why I said I was looking at options on this and realistically more interested in buying if it comes down here to the 200 exponential and simple than actually like buying puts or, shorting this thing. But, technically has a new daily high close. Took out these other ones slightly, held this as support, and now it's strong. So there's a good possibility this thing just keeps ripping to the upside. Now, is it literally like the only chart that we've even looked at in like the last like couple hours that is putting in all-time highs right now? Yeah, it's literally the only one. So you could argue that you're going to buy into a blue sky breakout and the one stock that's doing good is going to keep doing good. Sure, that's a legitimate argument. I get behind that. Probability wise though, like if I had to buy one thing in the stock market right now, not value investing, just buying into strength or momentum, it's got to be Snap putting in new all-time highs. Am I entering that position? No. So what does that tell you? Well, I don't know, but it's probably not good. Apple, the old apricot, the old fruit. Breaking down from our ascending trend line, 200 exponential and simple down here. Again, I'd be looking for it to break down, retest some of these supports. Looks like we basically just broke down to these highs right here, retested it, got a little bounce. I would much rather get it off the 200 exponential and simple, but this thing is looking weak. The trend is weakening. Maybe though, we come down here, get a little buy off this and then shoot up to new all-time highs. But I have a feeling that the best days of Apple are behind us for the next few years as, losing a massive amount of revenue by not being able to take 35% of everything from the App Store is probably going to affect their bottom line. But what do I know? Amazon trading sideways for like the last year. No one has made any money in Amazon. It has retested multiple times the 200 exponential and simple. 200 simple is above the 200 exponential, and it cannot break out right here. The big throw over, the big Josh Brown throwdown, the big psych out, the big fake out that I predicted perfectly. Yeah, so no one making any money in Amazon. These are literally the best conditions ever for Amazon to do well. While all of retail is shut down, while everybody's stuck in their houses, getting tons and tons of free money, and Amazon can't do anything, probably not a good idea. And this is like one of the best performing stocks. Yeah, I'll be looking at Amazon back here. Now, granted, we did get the perfect, bounce right here, entry potentially for that 8% move to the upside, but I didn't take it. I would potentially be interested in Amazon at 28.80. At the bottom of the range, the bottom of the channel for a move back to the top of the channel, 20%, 23%, then I'm potentially interested. But Facebook, I mean, this thing is rolling over and dying, probably not going to be good. There's a bunch of headwinds coming in Facebook's direction. We got the 821 cross. It looks like it is very likely, headed down, obviously, to, say it with me now in the chat, 200 exponential and simple, of course, somewhere around here. Obviously, we have that previous support here or resistance that would potentially be acting as support. So would not be surprised to see this thing below $300 very soon. But I will never invest in Facebook. It's trash. Google, strong, one of the strongest, one of the best. It's pretty far away from its 200s, and it's been a while since it tested them. So, I would be, for me, if I wanted to get involved with Google, if I was looking to pick up some more Google, I would literally just be waiting for it to test the 200 exponential and simple, and it would be a buying opportunity for me. Do I think it gets there? Probably not, because it's one of the strongest stocks, and it's literally propping up the entire markets. Netflix got the breakout, came down, retested it, got the push up here. Is this our little two bounce, basically taking place right now, and then it rolls over? Yeah, I honestly think it is. If we take out the high right here and start continuing up, by all means, I would expect the measure move to play out and our target of 673. Do I think that's going to happen? I do not. I do not think that's going to happen. I'm seeing a hard sell signal. I'm seeing weakness on the histograms here. I think that was a reaction rally. People trying to buy the breakout, retest, hoping for continuation. But in all actuality, I think the continuation will be back down to the heart line, the 200 exponential and simple. And I think this thing is going back down to $517 and eventually $466. But that's just my opinion. And, I just don't see Netflix like crushing it anytime soon. Again, I think they probably peaked. Let's keep ripping here. Gold, very weak, below 200 exponential and simple, continually putting in lower highs. Looks absolutely pathetic. I've been saying it forever. It's no surprise that gold looks weak. It looks like it's literally doing this right here before it goes into a multi-year downtrend and an 821 cross to the downside. Looks absolutely pathetic. And then also, if we look at the weekly right here and we compare that to the previous weekly, it looks eerily familiar. This was the top back in 2011. We got a little mini cross to the downside, saved it, and put in a triple top. Got a little cross to the downside, got the final of the triple tops, and then went into a massive, downtrend. So here we got a top. Matter of fact, let me leave them on the screen at the same time. We got a top, came down here, got the cross to the downside, cross back up, cross back to the downside. So do we come back up and triple top at 1900, or is this the beginning of our retest of the 200 exponential and simple? I would not be surprised to see gold down here at like 1600. Potentially, I would honestly not be surprised to see gold down at 1350 to 1400 on a wick and a retest of the long-term resistance turn support before continuation to the upside. But if inflation all of a sudden shows up and the inflation trends back on, by all means, I will admit that I'm wrong. But let's be real here. The gold market is supposed to be the hedge to inflation and has historically been for thousands of years. And for some reason, it's not breaking out. So maybe the inflation is not the worry. Silver looks terrible. Sideways channel right here, breaking down below the 200 exponential and simple. Tons of pressure from the top. This thing, if it breaks down here, it's going to be in the teens again. I mean, the measure move of this channel is like $16. So for all the silverbacks, for all the newbies, for all the people that entered into the game at $30 with $12 premiums on Silver Eagles, well, I'll buy those back from you for $20 with $2 premiums sometime in the very near future. So just let me know when you're ready to sell. XAU, XAG, gold silver ratio, did exactly what we said, had the breakdown, had the measure move to the upside, still in the process of that measure move to the upside. The 821 have crossed. We're at the 200 exponential running into resistance. I expect this up here at 82, possibly as high as 90 before we top out and then continue to the downside. We have momentum in our favor. We had a perfect entry point off of bullish divergence on the weekly. XPT Platinum had a nice little push up here, like a 10% move, but still looks absolutely terrible. Rolling over 200 exponential on simple. Could we get up here back to 1,060? 1,100? It's possible, but honestly, it seems very unlikely to me. This looks like a relief rally. Miners look terrible. AG First Majestic looks terrible. Silver Juniors looks terrible. USAS looks terrible. The miners are absolutely getting wrecked. The people that were pitching miners for the last year while everything else went parabolic and they were just talking about how great it was. And then meanwhile, people like me were selling the miners back here. I mean, God, you got to feel like a freaking idiot if you didn't get out of these things. Oh my God. What was it? First Majestic. I think we sold out of First Majestic at $22 and it's down like 50% since then. Come on. Trash. I mean, people just can't accept it. They get stuck on these narratives. Gold miners are going to go through the roof. It's a leverage position on gold. Well, gold and silver are just going down. So you have a leverage position to the downside. So great job. Tilray, same thing. Short squeeze, meme stock, Tilray pot stocks, and they're just getting crushed since then, continuing to get crushed. They look terrible. They look like they're trying to carve out bottoms, but honestly, I see no signs of life out of these things. We're seeing on Aurora, potential bullish divergence. I mean, but at what point in time does it just not even matter? And it's just trash. Canopy looks trash. ACB looks trash. Tilray looks trash. Uranium stocks topped out basically exactly where I said. $27 on URA coming down, trying to save the 821 right here. I told you this trade was this was unsustainable. No one gives a shit about uranium for 30 years, and then Sprott comes in and starts buying up crazy amounts of uranium after uranium has already ran up massively, and all this volume comes in all of a sudden. Yeah, that seems sustainable. No one cares about uranium. It looks terrible. I love uranium. I loved it when it was cheap. I don't like it now because it is expensive and nothing has changed. UEC, same thing. Massive run up here to the upside. Sold out at 350, essentially on the triple top right here. Again, I mean, it's above the 200 exponential on simple. Looks strong, but it looks weak to me. Looks like it's just topping out. This looks like it was just one more little push up for all the suckers to come in and buy the top on uranium. CCJ Cameco had this channel right here, came down, retested 200 exponential and simple, came up, put in a new high, got rejected at the bottom of the channel. Support has turned into resistance. I expect it to come back down here at $17, possibly down here and start putting in these lows again. Could it be at $10, $11 again soon? Sure could, man. People are going to lose interest just as fast as they got interested because they really don't believe in uranium. They don't understand uranium. They don't care about uranium. And uranium goes into longer cycles than gold and silver do. So as quick as the silverback showed up and got wrecked in silver, the uranium backs or the toxic avengers, whatever they decide to call themselves, are going to get wrecked as well. So URNM, same thing. We had a very clear resistance. Broke through it, could not hold it as support. Probably just going to break back down here. I expect this thing at like $60. Very weak. Again, it's like the Sprott like FOMO follow along. Like Sprott was like, we're buying up all the uranium, pump it, pump it, pump it. And then everybody else was like, yeah, me too. And then it's like, oh no. Oh no. Never mind. What are we going to do with this uranium? Copper. Looks pretty bad. Came back up here, filled the gap. It's just going to bleed out. Barely getting on to 200 exponential on simple. 200 simple above 200 exponential. Looks toppy to me. We got a high, we got a lower high, we got a lower high, we got a low, we got a low, we got a lower low, or same low. Looks very toppy to me. The copper trade, the uranium trade, the silver trade, the gold trade, the lumber trade, all done. They're all over. They were cool for a while, and now they're not. And what does that tell me? Well, if all of a sudden all these things that are used to build the stuff that would be good in a good economy tells me that we're probably not going to have a good economy sometime in the next like 1 to 10 years. And that's probably why all of a sudden everybody was worried about inflation and commodities and silver and gold and copper and all this stuff, all of a sudden not interested in them. Probably because the economy is going to be total shit. So lithium, hanging on, 821 crossing to the downside, looks weak, putting in some divergence, looks weak. Hydrogen, same thing, still range trading, came back down here, retest the bottom of the range, coming up, probably going to get rejected again, roll over. This thing's got to break one direction or the other, so until it breaks, not really interested, but I do like it long term. LBS1, the old lumber trade, the old hardwood, the pine, the fucking lobsters. 821 cross to the upside right here. I still think there's potential. We got the initial 40% move. I still think there's potential for the other, 35%, whatever, to retest the 200 exponential and simple. But, it's got momentum in its favor right now, and it got absolutely wrecked after like a massive run up. But I think it's just going to get rejected and roll back over. When it comes back down, I'll start looking at like a double bottom potential or something. But Caterpillar, the industrial sector just looks terrible. This is not unexpected. We've been expecting this. Once it broke down out of its channel right here, hit the measure move right away, basically like triple bottom, broke down below 200 exponential and simple, gap down here, not surprising at all. Below the 236 now, I expect it to just continue hitting our key Fibonacci level targets, 175, 150. We have showed multiple times what has happened previously. Whenever this thing, every other time this thing has been in one of these channels, it moves up, goes sideways to down for years. Moves up inside a channel, goes sideways to down for years. Moves up inside a channel, so what's it about to do? Probably go sideways to down for years. So I'm not interested right now. Deer, it was able to hang on for a little longer, able to hold on to the support right here. But now here it is at the 200 exponential and simple. 200 simple is crossed above the 200 exponential. It will make its way down to 290 and then eventually to the measure move somewhere around like 250. It's been holding on pretty strong. The argument for like farmers and this, that, and like crops and the thing and the stuff and the industrial, blah, 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 blah. It's definitely staying a little stronger than some of the others, but still look weak. Antero Midstream Corporation, that water play, looks like it come back up here perfectly. Got that, what amounts to a double top. I think it's going to come straight back down here. 200 simple, back above 200 exponential. Looks like a rejection off the 821, attempting to save the trend. Does not look good. Cemex. Same thing, overshot our target slightly, but basically got back down here, 200 exponential and simple. We have this descending channel after we broke out of the ascending channel. I do very much expect it to hit its target down here, like $5, maybe $6. Yeah, looks terrible. Cleveland Cliffs, this thing gapped down pretty massively. These iron ore stocks are looking rough. I mean, again, hit our target perfectly. Overshot it, actually. I think I was expecting this to potentially hold this support, but the measure moved down here and the perfect touch of 200 exponential and simple bearish control zone probably comes back up here and closes the gap, but again, not unexpected. Ford, trying to break out of our little channel here, descending channel, breakout, measure move potentially up to like $15. I don't know how it's going to do it, but I mean, hey, fundamentally, I would say probably not a good time to be in these things, but maybe the like new EV stuff, maybe closing the plants. I don't know. I mean, but it looks like it wants to bounce up here to like $15, but I don't know. It looks terrible to me. But again, everything looks terrible. I don't really want to be a buyer right now, honestly. GM, same thing, same chart. Looks bad, descending, breakdown below the 200 exponential. Looks even worse. 200 simple about to roll over too, but it did break out of that. It did it once right here though, and then just gapped down massively. So I'd be real careful with this one because I think there's a good possibility it's coming down here, like $45. Ah, fucker. Tricked me with the old pen, didn't you? Yeah, I mean, that's where I think it's going. Hasbro next. Again, could not hold on to the 200 exponential and simple. This just, once again, calling out that throw over. Did not look legitimate. Came down here, 200 exponential and simple, losing slope line, coming down. If this area breaks down here at 89, I think it goes down real quick to 82. But again, this thing is just range bound, range trading. Can't take out the all-time high. Can't break out of this consolidation. Works looks terrible. Got the perfect push down to 200 exponential and simple. You could argue that there is a nice little scalp in play here. But remember, this is like the worst of the worst. So, really got to see some bullishness out of this thing. But again, that's one of the ones where it's like, oh, I don't feel like playing poker. Let me just gamble on this, throw some money away. Any, aka Sphere, once again, just total trash bag, piece of bum shit. Had a nice little trade to the upside here, but it's really got to come back down to 200 exponential and simple before I'm interested in potentially another like 129% to the upside or one of these other targets. But again, this is like where you just throw some money that you don't care about and hope for the long shot. Weight Watchers doing exactly what we said. Could not be held up any longer. Could not even attempt to come close the gap. And apparently people just don't give a shit about themselves or their weight because this thing is just rolling over. Nobody cares. As long as they're at home, working from home, getting extra food stamps, why not just get as big as possible, eat as much as possible, and who cares about the Weight Watchers? Because no one's going to see me anyway in my new Palantir sweatpants getting thick, son. Walmart came back down here to the potential entry. Am I taking this? No, it's like 3%. It's not worth it. But, is there a trade set up there? Yeah, maybe. Looks to me like we're breaking down from support. Barely finding support at 200 exponential and simple. I mean, if Walmart's not hanging on, America's going down. Because I feel like 50 to 90% of America is relying on Walmart. So if they're not making money, what's that tell you about consumers? And WMC, Western Asset Mortgage Capital Corporation. Yeah, looks terrible. Somebody asked me to look at this one. I can't remember who. I'm probably going to stop looking at it because it has broken down from that key support below this line, below 200 exponential and simple, rolling over to the downside, trying to pick up some momentum off this triple bearish divergence. Does it get a quick little push back up here? A nice little like 14% rally and then rejection off of the 200 exponential and simple? Sure, there's a possibility there. I'm not taking it, but there is an argument to be made for a little scalpy scalp. I would rather it come down a little lower, but if it breaks down below that, I'd get out. Still 3-to-1 trade to the upside right here, off of like some triple bullish divergence and the blue slope line on TJD, TDMACD. I don't love it. I don't like it. I don't want it. But you could argue there's something there. You could argue it. I'm not going to argue it. I'm not going to argue it for you, for sure. Let's check out our cryptos. Let me check out chat really quick. Okay, super quiet over there. Let's keep rolling. BTC1, Bitcoin, CME futures broke down below, got the confirmed cross of the 821, barely hanging on, lost the 200 simple, was able to rally slightly above 200 exponential, bunch of red histograms below the blue slope line, massive strength to the downside on the stochastics, looks weak but stronger than spot markets. BTC USD on Bitstamp, got the exact move that I called out, exactly as predicted. 100%, no surprises here. Broke down even further than I thought. I thought we would find support at the 200 exponential at 42,000. Instead, we overshot it. We came back up. But what is this? In my opinion, this is literally just, and I shared this chart. Oh my gosh, can't even look at that. I shared this chart in the group. So we were expecting this to play out. But in my opinion, you know what? I don't even care. We'll just deal with all the ugliness. In my opinion, this is just a head and shoulders playing out as expected. So, that's our left shoulder peak right here. That's our head peak right here. That's our right shoulder peak right here. This is a break of the neckline. After we break through the neckline, what do we expect? A break, retest, and confirmation. So we have broken. This is our retest push back up. We would expect what was support previously at 44,750 to act as resistance and then see continuation in the direction of the break. And that is definitely one of the nice things about being in the group. You get to see this stuff ahead of time, not afterwards. But essentially what it breaks down to is the remainder of the measure move from the head to the neckline would take us down somewhere around like 36 to 37,000, which is potentially my pullback target of like the 0.5 to 618 area where I will potentially be a buyer expecting possible attempt to save the trend and continuation to the upside. But again, I'm very bearish here. I'm pretty bearish here. I shouldn't say very bearish here, but we are below the 200 simple and it has lost its slope to the upside. We are now barely above the 200 exponential and it lost the slope here, saved the slope here, but it closed below 41,754 is going to look terrible. And remember what a top looks like. The 200 exponential gets weak. The 200 simple crosses above it. We retest it, try to get back above it. It fails, and then we go into a consolidated long-term bear market. We saw the same exact thing happen here in our little mini bull market at that 14,000. The 200 simple gets above the 200 exponential. We come back up, we retest it, capitulation dump. This is where I started the channel. I literally told everyone ahead of time at like $13,000 that we were going to $4,000, and then we did. So this was literally like the first video I ever made on the channel, was calling out this descending triangle, you know, this distribution pattern, and us going down to $4,000. And then the one before that was a 2017 high, 200 simple above the 200 exponential. We retest it as resistance. It fails. We go into a long downtrend, lose 70% of our value. And then the one before that was the 2013 bull run. Again, come up here, come down, 200 simple above the 200 exponential, test it as resistance, roll over, go into a multi-year bear market, and lose like 70% of our value. So what does it look like happening right now? Looks like the exact same thing that I've literally been telling everyone about since we topped out here, since we put in our macro head and shoulders, since we hit our Fibonacci extension target, since we hit our triple bearish divergence, triple bullish divergence, triple bearish divergence. I mean, the market is trading extremely technically. If you're not making money in these markets, or if you're losing money in these markets, go to whoever you're subscribed to, or whoever's Twitter you're following or whatever, unsubscribe or delete that, and then start paying attention to people that are actually seeing these moves before they happen, because there's no excuse to get wrecked in these markets. There's no excuse to be ridiculously bullish in the market when the market is telling you not to be bullish. So, but that's my opinion. You can do whatever you want. It's not financial advice or financial advice. Extremely volatile. Bitcoin down. Bitcoin on the Bitstamp chart. A couple different indicator oscillators. Looks weak. I mean, we're technically not gaining strength to the downside, but still seeing more selling than buying. Again, you know, seeing a little bit of bullish divergence. Is this it playing out just to come back down and come back up and retest the breakdown? You know, what was support, now acting as resistance, and then see continuation to the downside, and then, you know, probably find support around 37,000, and then we got to be careful again, because is this a left shoulder, a neckline, a head, a right neckline again, and then we come up, put in the right shoulder, and then we go back down again, and the next thing you know, we're back down at 30, and then 30 breaks, and then we're at 20, and then we're at 10, and then we're at 5, and then we're at 0. Well, I mean, probably not, but if we go to 0, that's how it'll happen. But I mean, I don't think that will happen, obviously, but hey, what do I know? Just some guy on the internet that calls your kids ugly. And by kids, I mean your cryptos. I'm sure you have cute kids. And even if they are ugly, you know what? All kids are cute at least one time in their life. So triple bullish bearish divergence here, sell off, triple bullish divergence here, parabolic run up, triple bearish divergence here, / quadruple technically, and then breakdown. So now what's going to happen? The remainder of the measure move from the channel and our potential target of the head and shoulders. Look at all these things lining up perfectly. Oh my gosh, it's so crazy. 37,000. And what's going to happen when we break down again? We have a low here. We have a low here. We have a low here. We have a lower low here. Low here. Lower low here. Low here. Higher low here. So could we possibly get some double or triple bullish divergence again, and then get a burst back to the upside and retest that area again and play out our head and shoulders scenario? It's almost like there's market makers and algos just doing the same thing over and over again, and all you got to do is just pay attention. You just got to get out your little magnifying glass and be a detective. Ask a couple questions, write them down on the notepad, and then make that money. Take that money from the moon boys who don't know nothing, the idiot moon boys. We're going to do all-time highs. Bitcoin do $1 billion. Bitcoin do $1 zillion. They just want our Satoshis. I'm stacking, bro. I'm buying the dip. Ethereum looks terrible. Got down literally to our target perfectly. I mean, I literally said we're going to 3,000, and then we're going to 26. I think I said 2,600, and we went to 2,650 on a wick. So I'm counting that as a win. I was off by $50, but I literally called the dump within 20%. So I'd say that's pretty reliable. Yeah, sure. And we found support at the 0.5. Yeah, sure. 821 have crossed the downside now. Ethereum still looks better than most, but terrible. ETH to Bitcoin chart. I mean, this is exactly what we said. Breakdown from the Ethereum Bitcoin channel to the upside. We come back up, retest it, and then we're going down here to that 0.5 ETH to Bitcoin ratio again. FTT looks terrible. 821 have crossed the downside, bounced perfectly at that resistance that we expected to act as support. Worked out perfectly. Looks terrible. Short term could still see a little more of a push to the upside. Chain link looks terrible again. Same thing. Broke down from the 200 exponential and simple. Coming back up to retest it. They have now rolled over to the downside. This thing has officially entered a daily bear market. So wait, what's going on? What? Wait, what? Alts entering, confirming daily bear market? Huh? Chainlink? One of the strongest ever that led us into this bull run? Huh? What? Oh, Chainlink's not cool anymore. There's a bunch of other shit coins that just came out that are way cooler. FTM, Phantom, one of the strongest still. Saved the 821 cross to the downside so far. I mean, when this thing goes, though, it's going to 50 cents. But right now, it looks better than most. Same thing with Solana. Had a nice little rally back up here to the 821. Trying to hang on to it desperately. I mean, if it loses this area, our next support is at like $80. So, better take them profits, brah. Serum, SRM, looks terrible. Hit our target perfectly, the 618. Next target is the 0.5 in the 200 exponential and simple. Literally no surprise at all here. Looks bad. Still above its 200s though, which is good. Okay, so BAT did exactly what we said. Lost the 70 cent mark. Came down here to the 60 cent mark. Came back up to the 70 cent mark. Retesting it as resistance. 821 are right there right now. Bearish control zone. Trying to push back up. Trying to show some strength. But I just expect this resistance now, this 382, to just smash the price. I do not think we're going to be able to get back above that. Uniswap broke down below the 200 exponential. Got back up to the 200 simple. Broke down through it now. Coming back up to retest the 200 exponential. This thing has officially entered into a bear market. 200 exponential and simple. Bull slope to the downside. Rolled over. Looks like trash. What is the difference here? Well, here the 200 exponential rolled over, but the 200 simple didn't. Now we have both angled to the downside. Uniswap has entered its first bear market ever. Congratulations, Uniswap. Yay, you're a total piece of shit. Good job. Good job, bro. There's potential in the future, but you're trash right now. XRP, still shitty, but looks better than a lot of the charts temporarily somehow. Long term is like literally one of the worst cryptos. Short term looks okay, but you know, it's just the SEC, man. They're holding us down, bro. As soon as we break through with the SEC and win the case, man, we're going to all-time highs. XRP going to like $100, bro. Probably not. Probably just drank the Kool-Aid, and it just hasn't kicked in yet. But soon you will be done. 200 exponential and simple are still sloped up here. Hit our target perfectly, 618 and 200 exponential and simple. Hanging on to $1 for now, but in all reality, see you at 61 cents XRP-nesses, or whatever they call themselves. Dogecoin, XDG, again, very weak, broke down below 200 exponential. 200 exponential has rolled over. The slope is red now, acting as resistance. 200 simple is still angled to the upside for now. Hold on, little dojies. It's like the little doge, the little chihuahua is getting attacked by like a vicious bunch of junkyard cats, and it's just getting bit and clawed up, and it's not looking good for the doge, bro. ADA, cardinal beads, breakdown, retest of the 8. Looks absolutely terrible. Of course, it came down exactly what we said. The target of $1.92. The previous support right here came back up, and now it's coming back up, acting as resistance. Again, what does this look like? Well, it looks like a left shoulder, a neckline, a head, and then look at this one. Oh, look, a neckline again. And what is this? A right shoulder. So what's about to happen to Charles? What's Charles about to do to you? Don't turn around. And I know you're feeling some pain from the backside right now, but you don't want to know who's back there causing you that pain, because it is Charles, 100%. And he's digging in. He's digging in deep right now. And look, it's almost over. Just don't look, and then, you know, it's like it never happened. But if this thing does break, if the cardinal beads bust inside you, you're going to be in big trouble. Oh, no. Don't even look at that measure move. Oh, no. Oh, Charles. But really, though, you'll probably find support at like $1.63. But if Charles really gets a hold of you, if he really gets a piece, if you start unstaking and dumping, so you got like 80 cents, bro. You better pray to Chucky he doesn't dump on your face. Sushi looks bad. Breaking down, putting in a new low right here. I mean, look, there's not really much more reason to keep looking at these shit coins. Matic still trading pretty technically, broke down from the 382, finding some resistance. Probably some kind of like channel to be had right here. I would just expect these things to just keep bleeding out. I mean, let's be real. It's just like one meme crypto like moves to the upside. The rest just like dump and sell off. So is Matic going to 89 cents soon? Yes, it is. I'll see you at 89 cents Matic. Does it get up to $1.34 first? I don't know. Your guess is as good as mine. Polkadot, one of the stronger ones, trying to stop the 821 cross right here. Trying to save the trend. 200 simple has rolled over. It is still on top of it. 200 exponential is still hanging on. But, you know, I mean, it looks like it wants to come back down here like 24 bucks. It really needs to get above 37 or it's going to 24. Or maybe it goes to 24 then 37. But it just doesn't look great. It's showing some serious weakness. Bearish divergence in play. Maybe it goes to a new high first, though, and hits a triple bearish divergence. Litecoin looks like trash. Again, head and shoulders pattern. Breakdown from the head and shoulders. Coming back up to retest the support as resistance. And then, where's it going after that? I mean, Litecoin, another one that did not put in a new all-time high this cycle. Litecoin is trash. Charlie Lee is trash. The SEC is going to have him in jail in handcuffs, and then when he pays his fee, he can go back to being a trash bag free man. $120 on Litecoin. And then after that, it goes straight to zero. Bitcoin dominance looks pathetic, looks weak, rolling over, trying to put in some kind of bullish divergence right here. Is it going to get up here to 57% again? Well, if there's a capitulation move or it all of a sudden breaks out to new all-time highs, yes. But until then, I'll just assume Bitcoin's dead and altcoins are much, much better. Total market cap on the weekly, that was the Bitcoin dominance weekly chart. You know, pretty bearish here, third week in a row. It is coming back up, trying to retest that 8. Bounce off to 21, pretty solid, but looks like a double top here. And it looks like a much lower high on our indicator oscillators, our momentum indicators. And, you know, what is that going to end up being? A rejection at the bullish control zone and basically like some bearish divergence? I mean, probably, guys. Probably going to be some bearish divergence. Some of that bearish divergence. Probably going to be some bearish divergence playing out. What's that going to look like? Going to look like the end of the bull run. End of the old bull run. No more crypto cult for me. Riot looks terrible. Broke down below 200 exponential. It has rolled over, lost the slope. 200 simple. Getting ready to do the same thing. This is a giant descending triangle. It has literally gone down to sideways now at this point in time since back in February. It is literally about to die. Looks like it's about to die. MicroStrategy looks exactly the same. Total trash. Looks like it is about to die. Coinbase looks pretty freaking bad. Could not get above this. Breakdown. Retest 821. Looks like it's about to roll back over here. Got to put in a higher low or it's done. Robinhood had a nice little breakout. Talked about it showing some strength. Hard buy signal coming out of the bearish control zone. Bunch of green histograms in a row. Robinhood is breaking out to the upside. Retesting the 618. Could it make it all the way up to the $53 mark and the 0.5? Yes, but it probably gets rejected and then rolls over. But in the meantime, Robinhood is doing it. Yay, yay, guys, we're doing it. Oh, and what is that based off of? Probably crypto wallets. I mean, that was like the new big thing. Robinhood's got crypto wallets, bro. Oh my gosh, that's awesome. Let's put our money on Robinhood. Now we can buy actual crypto instead of just pretending like we own crypto. But we can still keep it on Robinhood. Yeah, that's awesome. GME, Game Stonk, rolling over here. Could not get back above the 821. Looks like he's about to roll over to the downside. GameStop going back down to 152 to retest the 200 exponential and simple. 200 simple is about to cross above the 200 exponential for the first time. This thing is rolling over. Looks like trash. GameStop is going to zero. Probably going back down here to like 137. Pit stop at 150. I mean, this is where your options trade is coming in now. If only the little game stonkers all got together and just shorted GameStop now, they could all actually get rich. But instead, they're just like, we'll just hold it to zero because diamond hands, bro. AMC your ass later because you're going back down to 30 bucks. Sorry, little AMCers. Sorry, little gorilla, mud puppy, monkey boys. What's their name again? Apes. Sorry, apes. Sorry, guys. Retesting 30 bucks real soon. Retesting the 200 exponential for the first time. Looks like trash. Hard sell, bunch of red histograms in a row. Maybe comes back up and retests 42. Maybe even gets back up as high as 45. But at that point in time, that's when you enter your puts. That's when you short the old AMC. Bed Bath & Beyond looks terrible. Still a giant descending triangle. Barely hanging on to the support here at the bottom. 200 exponential has crossed the downside. 200 simple looks pathetic. Is it going to ever get back up here and retest the top of the triangle? Probably not. It's probably just going to die. And when this thing breaks down, it's going to be in big trouble. But maybe it does. There's definitely a little gamble to be had there. Newegg looks pathetic. It has finally broken down from our green support at 1675, and it looks like it is very likely headed down to the 200 exponential. Breakdown, retest as resistance, and now continuation. See you at 1379. Remember what we said about this giant green candle and the 1 day of price action. Eventually, it's going to have that 1 day of price action to the downside. So this thing probably going to take a little pit stop at like 14, and then after that, 1275, and then after that, 1075. Newegg is in trouble. But I have ordered stuff from them in the past, and they are a good company. Oh, look, DraftKings. What did I say about DraftKings and having a bad feeling about this and not thinking that this was sustainable and had a feeling this was going to break down, lose support, and get crushed? Ho, really? And here we are, back down at the 200 exponential, back down at the heart line of the little ascending channel to the upside. So I think we probably bounce here. Could we come all the way back up to 618? Could we get back to 58 bucks? Sure, it's possible, but I think it's just as likely we retest the bottom of the range at 45. And there goes Kathy Wood's only good investment that she made in the last 6 months. Now she is officially a loser 100% again. Good job, Kathy. You did it. And that's it, guys. We made it to the end. We did it. Hooray. All right. Thank you guys for sticking around. Appreciate y'all being in here. Paulo the Great. Just send me a message, man, if you're interested in the group. You can get the email is cryptotrendtrader@gmail.com. You can message me there. It's basically a private Discord group. You get the indicator just for joining the group. It's $100 to join. You don't have to stay. You can just stay for the month, have the indicator, and leave if you want. If you want to stay in the group, obviously you can. For as long as you want, you're always welcome. I can give you all the details via email. Just hit me up. If you've already hit me up too, I will get back to you. A couple of people hit me up in the last couple of days, and I just have not messaged them back. I will message you back. I just haven't gotten around to it yet because I am working on some things for the course and whatnot. But I mean, I'm always working on a million things and trading and rebalancing, and I'm a busy man. And understand, please, that, I do these videos literally to help out the community and to grow the channel and, gain literally little to no benefits from these. So sometimes, I might not be in the best mood or they drag on a little bit, but I do think it's important for there to be one voice of actual reason and someone to do actual technical analysis in a world full of retard moon boys just saying, buy the dip, bro. It's going to 1 million. Yay. Because honestly, I really think the whole world is probably going to get wrecked here pretty soon. And if I can literally just save one person from getting absolutely wrecked and losing their life savings or their fortunes or possibly even making some money, all of this will have been worth it. And I know that there's quite a few people that I have already done that for. So just one more. I don't want to be greedy, but if I can just help one more person to get financially wise, learn technical analysis, and maybe even be rich one day and take care of their family, it will be worth it. Just one more. I just want my fix. Just one more person. But no, seriously, I appreciate all you guys, everybody that tuned in for today. Thank you all for showing up, all the positivity, all the good people in the community, all the people that actually spend the time to learn technical analysis, to learn about the trade setups and what works in the market. And, take the time to actually care and not just go on some Reddit forum and just buy what everybody else is buying, because that's not sustainable. You can win right up until you lose it all. But if you learn how to do actual technical analysis, learn how to trade with the trend, learn how to determine the trend, risk reward, probability of success, all that good stuff, you can sustainably be a trader, an investor, and take care of your family in a world full of shitty, idiot moon boys. So there you have it, guys. Thank you very much for everybody tuning in today. Thanks for staying till the end. Make sure you like and subscribe, share with your friends. If you're interested in the group, shoot me a message. I will get back to you sometime in the near future, I promise. And it'll probably be right around, like, I'll get back to you before the first of the month or whatever, but it makes sense to just join at the beginning of the month. It just makes it easier for me to keep track of everything. So, but yeah, I mean, you could always join a couple days early. I don't care. It's more about the effort, the want to learn, the need to learn, the participation. And then obviously, you know, it's good for you because you get the most badass, awesome fucking TJD master indicator ever in the whole world for free just for joining the group. Best $100 you'll ever spend in your life. Fuck yeah, motherfuckers. Peace, I'm out. Crypto Trend Trader, and I'm out of here. Thanks, man. Appreciate you showing up. Apollo, thanks for showing up, being active in the comments. David, Trader Billy, if you're still in there, man, I know it's late for you. CW, appreciate you as always, brother. Thank you, my man. Appreciate all your positivity. And thank you for thanking me, because that means a lot to me, man. I literally do this for you guys. And also, it's kind of entertaining to myself as well. And I don't know, maybe I'm some sort of like weird narcissist, and I just like to hear my voice for multiple hours at a time. So, but I don't know. Probably some combination of all those things. So, but there you have it, guys. Appreciate y'all staying till the end. Thank you all for tuning in, and I will look out for an email from you, Apollo the Great. If you have already emailed me and you're listening, or you're one of those people, Apollo, I promise you I will get back to you very soon. I just have been a little busy with rebalancing, end of the quarter, the Fed, all the other crap. Yeah. You don't need to hear my excuses, but I will get back to you very soon before the end of this month and beginning of the next month with further instructions, et cetera, et cetera. So, well, there you have it, guys. Appreciate everybody for tuning in tonight. Everybody have a good night. Thank you all, brothers and sisters out there. Make sure you love your family. Take care of yourself. Stay positive. Protect your principal. Trade with your brain. Yeah, that's it. Crypto Trend